Okay, so let me see. Just so everyone understands, I am working through at the present moment. This is kind of like a test right now, so I started early. Let's see here. So if I say hello, it should work. Okay. Okay, so why is this not working? Because I can select here, and it doesn't actually select. Okay, so that means I have to do here. Show transaction, interact files, property. Remove transform. Nope. I mean, this should be working. I can see it at least here. Good evening, good evening. I started it early because I'm working through some technical stuff, trying to get the chat actually to work this time. It's popping up here, so it is connected. I know that. Properties. Let's see here. How you doing? How you doing? So this looks like it's good. Okay. Control views via frame rate. Control via audio. Refresh browser. Yeah, no, it should be good. So that's good. Okay. So that we know that that's working. And then let's see in the docs. The docs is where it's not working. See the chat. Yeah, we pull up the chat here. Edit. Docs. Custom docs. Yeah. Yeah, it does say that. Okay, localhost, it should be working. Why is this not working? I just want to pull up comments. All right, apply. This should be good to go. URL, localhost 3000/doc. Okay. You guys are watching me struggle through technology. Because we started early. So the official start time is about 8:45, so I have until then. And I can see your comments on this widget, and it should be populating here, but it's not populating. Unfortunate. Yeah, the struggle is real. I have cookies. I'm trying, because I like StreamYard. I like StreamYard for what it is, but the resolution just is not good. But I like to pull up comments, because I can't pull up comments via YouTube. I can only pin message, which is not the same thing. It's terrible. Yeah, so let's see here. So what am I missing? So I got to go. I followed the setup instructions. Actually, let me use the widgets instructions themselves. Yeah, here we go. Setup. Okay, so refresh, click OK, refresh browser, become active. Yeah, here we go. Connect. Okay, so that's already connected. Stream comments get loaded into the chat box. Select specific comments. Yeah, no, should be connected. That's so weird. Oh, maybe if do I have to close this out? Were they competing for? No, I was being optimistic there. Okay. Start. Let me just do it again. I'll just connect again, see if it just needed to do it one more time. Control V, connect. Okay. Does it still say that it's scheduled for 8:45, by the way? I just want to make sure. If you guys can see that. All right, so if this is not working here, and this is like a live test, so, and then I'm going to get actually to the live stream. If I can't figure it out, then I'm going to have to do it outside of being live. Properties, let's see that. Yeah, it says local host. Did I spell anything wrong? No. Okay, so it just says it's live. All right, so that's unfortunate, because then people are going to come in and be like, hey, what's going on? Why aren't you talking about anything? Says 29 watching, now scheduled for May 24, 2022. Okay, because I did start it early. I scheduled it for 8:45. But I think RK, tell me it will be all right. Yeah, it's going to be all right. It's going to be fine. Okay, so this should be, it's all good to go. Okay, that should be working. Did I mess up this? So chat, we have to local host 3000 doc. All right, so now let me actually see in the doc settings. Local host colon 3000 dash doc. Yeah, that should be good. Unfortunate. All right, there must be a connection thing I'm missing. Okay. Yeah, no, it doesn't show up. It doesn't show up, my friend. YouTube seems to not like it. Yeah, so video link, copy it in. Okay, so you just press connect. Okay. Then that's supposed to work there. Yeah, it's not. It's absolutely not working. This is so silly, so unfortunate. Let me see if I put that next to each other. What if I close you out? Okay, let's put back to docs, apply, close, docs, show it. Ah, now it's working. Oh my gosh. All right, so technology just being absolutely stupid here. All right, so now, all right, you, RK, you're going to be my guinea pig. Do you show up? Okay, so now the second part to figure out how to make you show up. All right, so let me show just some random thing. All right, so it's not showing you up here. Hide it, unhide it. Oh, there we go. All right, cool. There we go. I can make you larger. All right, let's find a nice place to put you. Now you should be showing up. You see, like, these things are sometimes weird. All right, so I need to make good size. Put you... Where should I put highlighted comments? Let's put them right over here. All right, yeah, let's put them like right over here, right in front of me. Okay, so then I unselect you. Beautiful. All right, we're in business, everyone. We're in business. All right, so now we can actually, you know what? We're going to start it early because I'm not going to like stop the stream or anything like that. I just wanted to fix this live. It was bugging me so much. And now it's finally working. I can show comments. I can show comments and we can have good quality. No compromises. No compromises. Okay, so you know what? In fact, I'm going to make this bigger so I can see your comments better and make all this stuff smaller. All right, just kind of organizing myself here, guys, and then we're going to absolutely start. So as the title of this shows, we are going to be talking about, and actually let me pull this up over here. Today we're going to be talking about live analysis. So we're going to do some analysis live. We're going to talk about Snapchat, their earnings. We're going to pull them up, and we're also going to talk about Meta, Google, and basically anything you guys really want to talk about. Any form of analysis, I can do it. So let me actually play around with it. You guys, let me see if it works even in this one because it should work. Okay, so now let me customize this. Let me make it much bigger. Okay, so bacon memes, I chose random. So here we go. All right, so that should be the size. All right, unselect, select another one. There we go. Oh my gosh. All right, and then I'm gonna look for a long comment and see how that looks. Okay, you see, I wanna make sure with the long comments, give us enough room, some wiggle room there. And then I'm gonna keep that comment selected. And then real quick, we're gonna go back to desktop, set this up. Thank you guys so much for your patience because, you know, this is the first time and only time we have to do this setup thing. Every other time after that, we're good to go. We don't have to really, we can skip over this. I just go straight into the stream. All right, awesome. This video assistance was very helpful. And now we shall put you here. All right, there's a long video that I did make. I'll just announce this right now that it's already uploaded. It hasn't been published, okay? But it's already uploaded and it's just ready for me to just click the publish button. And it's a very long video. It's a reaction to Sven Carlin's video on the macroeconomic landscape. I will just say that it is a very long video. Before I knew it, I turned a 9-minute video into a 51-hour not 51 hours, sorry, 51 minute, imagine 51 hours. 51-minute video going really deep into some macros. If you guys enjoy macro content, be sure to check out that one. I have it set for now to come out tomorrow morning. I haven't made any videos yesterday. I was very busy. Didn't make any videos today except for that one. And then analysis videos are coming up because the winners of the vote was Warner Brothers Discovery, followed by Strongman Personal Finance's portfolio review, which will be funny to do. You guys know why it's going to be funny. But yes. The price I see. Okay, so let me test it here. Let's go. Capital Mindset. What price is load the boat for Meta for you? What if Meta goes to something ridiculous like $50? My load the boat is right now, and it's not really like load the boat, but it's aggressively buying or more aggressively buying is 160 and below. So actually, let's take a look at Meta stock price today because it's part of the conversation we're going to start to have. And Meta right now is at about, and let me actually zoom in. So Meta is actually about at $181.28 at the closing. It's slightly up after hours, but who cares? So, but today was a negative day, and you guys already know what caused it. So let's pull her up. Snapchat. So Snapchat reported earnings today, and yeah, not reported earnings today, but it's not particularly the reason why. The reason why is they actually were more like, well, it's not really like a rumor, but more of on the speculation that the macroeconomic backdrop is not going to be very healthy for something like Snapchat. So it's really fascinating to see because we have seen, I think you can count a ton of stocks I think you don't have enough hands. You definitely don't have enough hands to count this because so many stocks this year have gone down 20+% in a single day, which is really fascinating, really fascinating. We just saw a bunch of them with retail last week. I did talk about today in the Discord call, well, actually it was yesterday, on guidance regarding how important that is for some of these retail names. And we did see that with Nordstrom. So Nordstrom reported today, they actually beat on expectations. Guidance was raised. And so that guidance outlook was what actually brought up the stock. Because if you actually look at JWN right now, I'm not saying that it's a good stock, but I'm just saying guidance. You see like 9.43%. If you actually look at why, it was because they guided better than expected. Okay, so, but yeah, Meta was about 160. I'm actually going to pull up the model so we can actually start playing with it today. But let me pull that up now. I haven't used it today. I was really busy today, so it's going to have to wake up. Wake up. Wake up. You're going to work today. Some fonts cannot be loaded. All right, whatever. I'm trying to stream here. All right, so we'll come back to this. We'll come back. Oh, this is actually spoken about in the video for today. But yeah, sticking to this for now, let's talk about Facebook. And then actually, I also want to pull up Snapchat's earnings or Snapchat's report, more like. Yeah, Snapchat got wrecked. Absolutely. No, yeah, 51 hours was, this was misspoke by me. I just can't speak right. Okay. But yeah, no, 51 minutes around there. And I'm going to put chapters, of course, so don't worry. Don't worry. I know that, and you can always put it to 1.25 times speed or 1.5 times speed. So you don't have to listen to me go on and on and on about stuff. You can just put me up on a faster pitch if you want. So yeah, let's see here. You're not reporting on it here, so I'll just go to a different category here, Snapchat, and I just want to pull up this article. This is why. So this CNBC article, ads. CNBC article gives a good glimpse as to exactly why the company fell. So Snap's warning sends shock across digital advertising as investors flee social media stocks. So digital advertising, remember, we're talking about the consumer. The consumer's kind of getting crushed right now, liquidity crunch, et cetera. Consumer spending kind of not looking too good. I know that in April, by the way, I don't know if you guys saw this, but in April, the actual amount of prices for new homes, or sales, for new homes went down by 16% despite prices going up. So remember the last live stream on Sunday, those three factors? Well, we're actually seeing it kind of play out there. So keep an eye out for that. That's really interesting stuff. And actually, it makes a lot of sense when you kind of think about it regarding how Wells Fargo, when they reported, they're going to give you a good glimpse into lending growth, et cetera. That's coming down. Well, what's that going to do for sales, right, going forward? How is that going to affect? And it's not just Wells Fargo. Don't think it's only one bank. It's across the whole banking sector. And the price is still going up and sales coming down, right, is a bit of a problem, okay? And like I said, anecdotal evidence, the builders are actually reaching out to my wife and I, which in 6 months ago, they weren't even caring. They had so much demand. So now they're coming out and saying like, hey, you still interested in looking at these new homes? What do you guys think? You want to come by? And it's like, whoa, okay, you're kind of like just laying the red carpet now. Not literally, but figuratively. Okay, so yeah, the CEO came out and made a message today and absolutely crushed his stock. So again, let's go back to Snapchat. 43.08%. If we actually take a look at Snap's 10K, which we'll actually pull up here. Let me pull it up, and then we'll take a look at the books. We'll try to come up with some semblance of an evaluation. But it's going to be difficult. I know that I actually had a small discussion real quick. Oh, and I see Chris. Chris, you're saying you think liquidation value for Meta is about $50 a share. I don't think I'm going to get it for that. But if I do, I can tell you that it would probably become the largest position in my portfolio by far if I ever got that. I don't know if I will. Okay, I see a lot of you guys are still sticking to the format of capital mindset, adding capital mindset, so I can see your comment. I'm overweight in energy, healthcare, and value dividend stocks, which serve me well. But I am wondering, when do you feel like this might be a crowded of a trade? I mean, I think it's starting to get like a crowded trade. I know like energy, for example, when I was acquiring energy, it wasn't a crowded trade at all. In fact, people were very pessimistic. And then when I started to see that everyone started saying like, you got to be in energy, you got to be in energy, which that started to occur at the tail end of last year. Then that's when I started to get a little sussed out by holding my energy stocks. Not that I don't like them as companies, I do. And so I still have ConocoPhillips, but obviously now at a reduced price, or not a reduced price, a reduced allocation. I'd say that depending on what types of companies you're really talking about, if they're not cyclical in nature, some might make an argument that you don't really have to care for selling either, right? Sometimes playing with the soap is actually the wrong move to do. It just depends really on what specific company. But value dividend stocks, I mean, look, if maybe you're at a point where you don't want to, I don't know. Let me just say, is it egregiously overvalued or is it just moderately overvalued? It just depends, because if it's moderately overvalued and subject to debate, maybe you'd be wrong in taking profits. You know, just like those are some thoughts I usually come through my mind if I was in your situation. Mindset. What do you think about Pinterest? I have a video on Pinterest. RK, not PK. And I gotta tell you, I did a video on Pinterest because it was requested, because there's an individual by, I forget his name, it's Sasha something, and he did a video on Pinterest. So they, naturally I had a subscriber, and back then I was like just taking every single request all at once, and I didn't get that many requests at the time. It was still doable by a human being. But in the case of, and here I'm actually pulling up their 10K here. In the case of Pinterest, I didn't like the business, not really up to my level of understanding. I'll say that my wife uses Pinterest. I don't use Pinterest. That doesn't mean it's a bad company. Doesn't mean a bad stock. Doesn't mean a bad investment. I just don't fundamentally understand the future prospects. But on a financial basis, I did conclude at the time that it was overvalued. A bit overvalued. All right. And then I just made some assumptions based off of what the other creator had made and kind of just plugged those in and gave my thoughts on that. If you want to see in greater detail my thoughts on it, go check out that video if you'd like. I did poke fun a little bit because he did make like a typo, I guess, on kind of double counting what EBIT is, something like that. I forgot exactly what it was. All right, so we're here on Snapchat's consolidated statement of cash flows. That's interesting. Usually it's not the first financial statement. Let's go to the balance sheet first. So balance sheet, cash and cash equivalents. Okay, so this is ending March 31st, by the way. So 2022, 2.4 billion, 1.9 billion, that's fine. They're probably still using equity a lot. Marketable security is fine. Okay, so I just want to see on their liability side, accounts payable, yeah, it's nothing. Convertible senior notes, okay, it's going up. Other liabilities, they don't have any long-term debt as far as I can see, so makes sense. But these are convertible senior notes here, so they don't have any form of big forms of debt that I can see that it would scare me away. So it's all looks good there. Now I want to see, where's the income statement? Income statement. Here we go. So income statement. So growth is pretty good but again, law of large numbers, they're on the opposite end of that. So they're small. They're starting off of a small base. If I remember, what the heck was their market cap around here? This is insane. This is incredible. In October 1st, the peak around there. Oh, sorry, September 24th. People were paying. What is this? What's the market cap now? Is the market cap actually 20 billion? I don't think this is updated. I don't know if this is updated. 20 billion, but geez, what is that? It's like $100 billion market cap around there. That's incredible. That's incredible. All right, so people were paying it though. So yeah. So revenue, income, they're still not profitable. They're still losing. Well, actually, declines are accelerating here. What's going on? So operating. Okay, so operations are getting better. So it's not operations. Interest expense is fine. Income tax expense, net loss. It is updated? Okay, so wow. So 20 billion. So then people were pumping it a lot. Wow, that's crazy. Okay, so yeah, they're diluting. Income tax expense. I mean, taxes can't be the only thing. What is causing it? Other. Oh, this other right here, obviously. Okay, I wasn't seeing it. This other. Let's go to statement of cash flows, see what's going on here. Issuance of common stock, where you at? Sale of marketable securities, no. Maturities of marketable securities, net cash. Cash paid, purchase, net change, okay. Issuance costs, cap calls. Stock options, net cash. Okay, so that's fine. All right, but on an operational basis, they are cash flow positive. So they have positive cash flows. It is declining. What the heck's going on? What are you doing? Why are you going down? Why are you not going up? So net income was accelerating, or accelerating to the downside, and I was hoping that we would have net cash provided by operating activities. Okay, amortization, stock-based compensation. There we go. There's our number there, by the way. But I was looking down there first for a couple other things. But okay, so that's maintaining relatively stable. It's fine. Depreciation, amortization. I mean, this is a problem. I just brushed it off like it's not a problem. It is a problem. They're issuing a lot of stock, but you can make the argument that they need to kind of keep talent on the team, so to speak. Fair enough. Change in operational assets, liabilities, affect acquisitions is fine. It's not that much of a difference. This actually could be, this is already right here, the difference between them. So take that with a grain of salt there. All right, let me see some questions about the stock before we actually start to get into some other stuff. Snapchat and Pinterest comparison would be nice. Okay, so I can do actually a comparison analysis. Capital mindset. Thoughts about the CEO saying he could have 50% yearly growth with no additional users a year ago, dumping 700. Yeah, okay. I mean, he's making some outlandish comments. I did not know that. 50% yearly growth with no additional users. Well, I think he has to say that because I'm pretty sure the growth has really stagnated in terms of the user base. Let me actually confirm that. But if I go to their... Let me see if they have an investor presentation, because they would probably try to highlight that, or not highlight that, but try to actually hide that. And if they hide that, that's going to tell me everything I need to know about that. But I'm pretty sure their user growth is not robust. Yeah, here we go. Okay, let's see here. View as PDF. Boom, boom, boom. Okay. Oh, there we go. Boom, boom. All right. And then I might move myself over here to the side. Okay, right here. So 332 million daily active users. So Q1 of 19. Okay, no, they're actually growing. Rest of world is actually picking up. I thought, yeah. The last time I checked. Okay, so United States, though. United States is not growing at all. United States is pretty much kind of stagnant now at this point. I mean, 80 to 98 is decent. It's decent, but, not pretty much what they used to be. This is actually very interesting. Europe. But the problem is, as we talked about with other social media companies, North America and Europe, these are the high value clients. And then this is going to be like hopefully more valuable in the future in terms of ad rates. Now, the problem is not all platforms are created equal. So ad rates really do depend, or ad engagement does depend on the platform. Some platforms are just not built optimally for that. Okay, so high penetration, 90% of 13 to 24-year-old population. So key demographic soon. I do have a Snapchat. I don't really use it. 30, okay, yeah, that's pretty good still. Yeah, so they say they have 24% penetration. I just don't see older people using Snapchat. Anecdotal evidence, and I don't see it happening here. Don't see it happening here. But I guess, yeah, sure, the potential. So he's probably saying like 50 billion. I'll bring myself back now. 50% growth. That's, I guess, a little optimistic to say the least. I think that's pretty optimistic, but who knows? Maybe he has some insight that we don't have. But they could increase the growth by charging more. The thing is, you have competing products, you have other places. So maybe he's looking at it like that. So maybe it is actually possible, but I don't know if it's like for long-term growth, 50% every year. I don't know how long that's projected out. Thoughts. Okay, so Capital Mind says Snapchat, a camera company, when their website says they are. Yeah, I mean, I'd say they're a camera company, but how many cameras do they sell? They're pretty much a social media company with a camera-like aspect. All right, so what if Meta buys Snapchat? They tried to buy Snapchat, but I think Snapchat denied them, and then Mark Zuckerberg didn't like that. Let me guess, accelerated loss due to the company's private jet. Yeah, maybe. Capital Mindset. I can't really fathom the Snapchat caused today's market decline. Do you think this is the case? Well, it's not that Snapchat caused today's market decline. It's that Snapchat caused Facebook's decline and Google's decline because of the commentary regarding the advertisements. Because both of those companies make the majority of their money in ads. And then those two companies made the market decline. But yeah, you could trace it back and say, technically speaking, Snapchat made the market decline. All right, cool. We can say that too. But technically, they did see that one. Buffett bought NU Holdings at $9.82. It's trading at $3.33. I gave up on NU Holdings dedicated video, but have you looked into it a bit? I still want to do a dedicated video. And like I said in the past, I think I said it in the what's the other one called, which I think is another Buffett stock, but it's in Brazil. I know it's not Buffett buying those. I know it's not him buying those because he would know. I know he would know better, which is making me worried for Berkshire but it's a small portion of their holdings. They bought another Brazilian company. What was it? And I'll talk about Nubank in a sec, but I just want to remember this the other company, StoneCo. So StoneCo, it's okay. So both of those companies, they're Brazilian companies. I remember I'm married to Brazilians. So if you guys think I hate Brazil or something like that, I don't hate Brazil. But StoneCo and this company, which is Nubank, which is a bank in Brazil. It's a new age bank, stuff like that. I wouldn't really be liking those. Okay, so let's pull up Nubank real quick because I do want to talk about Nubank. And all right, so Nubank, yeah, when it was requested, I wish now more than anything, because, if anything, that was good timing, or it would have been very good, something to look back to and say, oh, look, I was correct. But I know I said it in videos back then that Nubank or NU Holdings and StoneCo, I don't like those companies. And I think STNE, I'll kind of express why on kind of the greater prospects of these companies, and it was much higher. Wow, that's absolutely incredible, the drop it's had. All right, but StoneCo and Nubank, they're Brazilian entities. StoneCo has some sort of arrangement within the Cayman Islands. They do disclose that in their 10K. So if anything were to happen, you're kind of out of luck. They've structured it in a way to protect themselves. Also, in addition to that, there are some implications or some understandings you have to kind of take into account when you look at foreign investment. Consider that the business culture in where you live is very different from the business culture elsewhere. And you got to keep that in mind. And also keep in mind that the amount of, I guess, protections, but actually it's mainly the culture. What I call applying I know this is going to sound like word vomit, Western normative perspective. Wow, sounds like a university jargon. But Western normative perspective in investing can be very dangerous. You have to, I think, understand, one, that different markets play sometimes by different rules, unfortunately, and that oftentimes you might be getting yourself into something you don't quite understand, especially if you don't take that into consideration, right? What's the business culture where I live versus the business culture where this country is from, and how that might affect things. And also consider this secondary factor, which is also equally as important. So let's say hypothetically the company is also good and the management is good, right? Management is good, but the macroeconomic backdrop of that country is not good. And relative to your own currency, so if you're in dollars, the dollar strengthening to the real or the Brazilian real, that could be a problem, right? Those are things to consider. When you extend your sphere of influence in investing globally, you have to then start to think about currency risk or cross-currency risk. So hopefully that answers that question a little bit, but yes. And that was for this question, by the way. Okay, going through this. Got a question on Tattooed Chef. How much more will, well, not Tattooed Chef, but Strongman's TTCF short position says, how much more will Snap drop? Absolutely zero clue. I don't give price targets. Zero clue. But, I mean, I wouldn't be surprised if it did jump tomorrow. Would not be surprised if it jumped tomorrow. In fact, if I was a gambling man, I'd gamble more that it would jump tomorrow off of maybe like a sort of dead cat bounce, and you could make a quick trade, but that's in by no shape or form financial advice and not recommendation for any form of trade. Okay? Just making sure. You know that. Stone for Buffett. Stone Co. is a core holding for me. Okay, then the second question you also have to consider is what currency are you investing from? If you come from Brazil and you have Brazilian reais, you don't have that cross-currency risk as much as like an American would. An American investing in Brazil has to worry about that, but not really so much a Brazilian investing in Brazil. Well, you could worry about your own inflation rate and then the real rates of return, but that's neither here nor there. But I'll tell you that in Venezuela, we had the best performing stock market in nominal terms in 2018, I believe, 240,000%. Right? I'd like to see you guys return that in a single year, huh? Yeah. You bet you wish you were invested in Venezuela. How many of you would want to invest in Venezuela? Let me know. All right, so didn't Stone Co drop due to inflation? Yeah, like I said, cross-currency risk. So even if it's, and that was a key point in the Stone Co video. So I did do a Stone Co video. So in the Stone Co video, I talked about even if you have all the ducks lining up in a row, you have good management, good everything, right? On top of that, you have to worry about cross-currency risk. And so your returns can actually be negative despite the company actually executing well because of the currency in that foreign country, right? You have to consider that or factor that into the risks, right? Okay. So, have you looked at network? And this was answering that question just in case I didn't pull that up. So one brief complaint about this new system that I'm using. It doesn't update as quickly as I would like, but it's neither here or there. It's fine, I think. Okay, so now I'm going to actually get into talking about, it still hasn't updated. This is so weird. Update already. Because I can see the stream comments on YouTube, and then I have it pulled up here, but it doesn't update as quickly, so it's annoying me a little bit. All right. But anyways, it will update. So until then, let's go to, where was I? Snapchat. Okay, so I don't want to really talk about Snapchat too much more because evaluating this would be kind of a doozy, and I'm not gonna be able to give a precise evaluation. But on a quick trade, I think that I wouldn't be surprised if it were to make a big jump, not a big jump, but a small jump, maybe a medium-sized jump tomorrow. But that just because it could be just oversold or the reaction might be so large that you might see a bounce up in some bid orders. But then again, I have no exposure to it, so I can say whatever I want. I do know that they have a very engaging games and a TV show. So I was talking to some younger people today, and they're telling me how the TV show, the dating show, where you give the other person your phone, and they're supposed to know if they look at your phone and they go through it and they get to see, do they want to go on a second date or not? And if they do, it's all well and good. Those shows, people eat them up. All right, people eat those up. Okay, so I think that we want to move on to Facebook. So Facebook, let's actually remember and Tesla's plugged in here. What are you doing in here, Tesla? All right, so Tesla's probably from the older video. All right, so we're going to plug in Meta, let it wake up, and then we'll come back to this. So Meta's down to $181.28. And you know what? We might as well actually, you guys know the portfolio, what it is, the allocation to it. So no need to repeat that. All right. Just quick comment. This thing I think has just completely stopped working. So I'm going to have to figure out why that is. Because now the comments are just not updating. I only have these old comments. Okay, yeah, it's just not updating. Whatever. Okay, so Meta Systems down 7.62%. I talked about in previous videos how I believe that personally I want to buy more Meta at about 160 and below. Those are the prices that I would like. Otherwise, I'm kind of getting okay with my allocation to it. But if it gets to a point of 160 and below, that's when I want to then build up the position even more. Maybe just like nibbling at these prices now, because I think it's risen to about 7% allocation currently of all publicly traded stocks in the portfolio. But yeah, I want to say that Meta, unlike Snapchat, has a bunch of ways to monetize more than Snapchat. So again, like I said, you don't want to confuse that all social media are created equal. They all have different quality metrics or qualitative metrics that we can look for monetization. So for example, Snapchat, it's a little bit more difficult, in my opinion, based on how the platform is designed to really monetize it. They can figure it out, yes, but how successful will they be? I don't know. They can still be successful and still become profitable, but maybe at a reduced size of a company. Twitter, for example, it's very difficult to monetize there. They've done it, and to varying degrees of success that we can all have a debate on. But yeah, and then now they have the whole problem with Elon Musk kind of ousting them for their internal control qualities regarding how they measure bots. Turns out they're only using a sample size of 100, which he apparently signed an NDA. And then, I almost think like Elon Musk might be trying to just destroy Twitter. But like at the same time, I can't feel bad for Twitter, because it's like, okay, well, you were basically kind of misleading shareholders there, and Elon Musk did shareholders a bit of a favor to let them know, hey, they're not really disclosing this information. So yeah. What do we have? Comments? Capital Minds, have you ever looked at Perion Networks at all? Now trading at... No, I didn't. If I'm being honest, my work is keeping me extremely busy right now. So, I mean, my work hours are getting like absolutely ridiculous. I don't have like a work hours. It's not like a timestamp, but it's just, it's been a lot of work. We're in the middle of closing some deals. Okay, so Perion Networks. Yeah, this is the one I think I looked at last live stream. Yeah, I haven't looked at this one. I need to take a look at it. But it is already on the list. It is on the list. I know you looked at it. Yes. Okay, so you saw, remember the last live stream. This is very, okay, so let me see if it's just this update. Okay, so if I close out and then let me refresh it. Yeah, so annoying. So annoying that it's not working. All right, whatever. I'll have to figure this out again another day. For now, we'll just use this then until maybe it starts working randomly at one point. All right, let me just make it smaller because we're not even using it. All right, it was okay while it lasted, the ability to bring up comments. Gosh darn it, technology. All right, so we have more questions coming in. Speculation on why Snap only said they'll come under 20% growth without saying where they think it'll be, leaving it blank. Maximize fear. Analysts were thinking 50 to 100%. Yeah, so they were thinking 50 to 100% growth probably because again, we just looked at that the CEO claimed to have the ability, or the company had the ability to grow at 50% per year for many years to come. That was the claim. So maybe analysts were saying, well, management's not lying. Let's make that assumption. Now, we can't make that assumption. Things not going to be so good. So, yeah. And then why Snapchat? Well, it's not really speculation. They're claiming that it's because of the macroeconomic backdrop. We've talked about it for a while now. Liquidity crunch. Liquidity crunch can manifest itself in many ways, right? Now the rest of the YouTube community is coming out and saying, you know, now they're discovering liquidity crisis. But liquidity crisis, liquidity crunch, whatever you want to talk about it, you know, or call it, it's all the same, is one of the symptoms is the consumer getting squeezed on ends that their discretionary spending should be going down. Now, advertisers are usually advertising for what? For that discretionary spending. They're trying to get that discretionary spending that you're going to make in a given year, and they're going to try to convince you to spend it with them. You don't see like an ExxonMobil advertisement for, you know, buying our oil. It's like, oh, here. Or you don't see, I haven't seen, and I've never seen a Tyson Foods chicken commercial or anything like that. So all these needs-based businesses, I don't really see the marketing spend might slow down maybe a little bit in some of them. You think consumer packaged goods and stuff like that, but you know, they're not going to suffer as much as something like car companies might, right? Car companies is a little bit more of a discretionary spend. That's more on the lines. But all in all, in aggregate, you should see a decline in advertising spend, which is going to affect Google. It is going to affect Meta, and it is going to affect Snapchat. Some more than others because, again, the qualitative aspects, which are at times difficult to measure, some platforms are just better than others at engagement, okay? So you got to think about that too. La Fufu made a buying video on Venezuelan stocks. Oh, no, you're completely joking. Okay, so Meta Magetta. Okay, some more questions here. You see, I hate it when it does that. It just brings me all the way down, and I have to refine where I was so I don't skip anyone. Google is 7.5% free cash flow enterprise value now. Do you think a low-quality asset like Snapchat has any bearing on Google's performance? No, I don't think so, but the market, that's what the market's telling you. The market is so like there is it's like if they're going to struggle with advertising, it doesn't mean that Google will necessarily struggle with advertising. It just might mean that there might be a struggle with advertising. So obviously, like Google is not going to go down 40, 50% in a single day. All right. So if I bring up Google again, which I will have to do a Google update now because I think now it's fair. It has come down enough for me to maybe justify it because I was kind of waiting on it. So actually, no, it kind of just recovered. It got to like 2,000-ish, and I was going to make a video. Now I'm going to hold off. No, I'm kidding. I won't hold off, but I'll still do it. So, yeah, it's not so much that. So on the given day, they're down 4.95%. You see throughout the day, they actually did kind of recover. Now they're up about, well, let's go to the close. They're up about 4% from the all-time low in the day to the close. So, no, I don't think it's going to mean that Google's business is going to get hurt, per se. The business is going to do fine. The business is going to survive. The business is going to do what it does. Okay, it's going to have enough money to do all of its investments and then some. But it's bringing into question some of these qualitative aspects. So we want to consider that. Okay, so if FB falls below 160, would you let it grow to what Apple is in Buffett's portfolio? Look, no, I wouldn't let it grow to that size, but no, it could grow even more. It could grow to, I'd kind of say, and this is just penciling it out off the top of my head, maybe like 10 to 15%. So it's sitting at like 7-ish%. Also keep in mind, consider this, as it gets down to that price point, obviously the percent allocation might go down, all else being equal. And so, you know, when I say that, it does mean it's going to be substantive. So all else being equal, today's money, I could make it like about 10%-ish, 10 to 15%-ish. And then if it were to go even lower than that, then of course my answer starts to change there. Okay, so yeah, this is so weird. Oh, I understand why. Let me see this because I can actually, because I'm really stubborn, so and I'm gonna fix it because I want to. There we go. Now it's gonna work again because I have faith in it now. Boom! I got it to work. Ha ha ha. Technology, you can go suck it. Now I can bring up comments again. So now I know what to do. So when that happens, it might be some weird connection problem that it gets, but now I can bring up comments again because now it's updating. All right, so wow, there's a lot of comments that I have to catch up to. Look at this. Jesus, guys. I mean, I'm very excited. Or happy that there's a lot of comments. Lots to talk about here. Okay, so just kind of scrolling through. Okay, these are all more comments actually towards each other, so that's fine. All right, so I think I got some other stuff. Google. Okay, so that's where I was. Facebook, fake alias, capital mindset. Thoughts on their ability to monetize WeChat? There seems to be heavy criticism of Facebook on this front. You mean, well, you mean WhatsApp, right? Because they don't own WeChat. WeChat is Tencent, I believe. But yeah, no, similar thing. So I think Facebook, they can monetize. I almost said WeChat too. WhatsApp, if they were to, treat it almost like becoming a Venmo. If they were to do that and make it some sort of payment processing system where, you can engage in e-commerce, you can engage in even physical commerce through that application, I think that's a really good way to monetize it. No advertising or anything like that. Just offer people, kind of almost become a quasi bank of sorts. Start competing with something like PayPal, but use WhatsApp and make it seamless. Try to make it so you can pay and even, I don't know, get an issuing bank. I guarantee you any of the banks would be like, yeah, Facebook, let's make a WhatsApp credit card or debit card. Definitely they'd be able to do that. They'd 100% be able to do that. And then again, they can offload that risk to the bank. They don't have to take on that risk necessarily, similar to how Apple does it with the Apple card. That's actually a Goldman Sachs credit card. And I think MasterCard is the plumbing for the card, but it's a Goldman Sachs card, not an Apple card. Apple's not the bank for it. But yes. No problem. I was just curious. Oh, BP, always with the Venezuelan stuff. Capital mindset. You have to know. Have you seen how Mark Zuckerberg wears so much sunscreen before investing anymore? I'm kidding. Yeah. I need him to stay alive. He just needs to wear that sunscreen. No skin cancer for Mr. Mark. Why did I buy Netflix stock? Jeez. Okay. Why did I buy Netflix stock? Well, because I do like the prospects of what they are, right? They're a leading streamer. I do, unlike, I guess now it's unpopular to say this, but whatever. Netflix, I wouldn't agree necessarily that it is a new two player, because actually my eye just saw your secondary comment kind of following that up. I mean, we can debate the prospects of it. I wish almost like we could engage verbally, because through text you're at a disadvantage here to come across the information or provide the information. But yeah, no, I'd say that, okay, let's look at it this way. When you looked at the data, or when I looked at the data regarding the long-term potential of what I think is going to be the stability point for something like Netflix, I think that they have a real chance of actually getting there, and in which case it becomes more of a cash cow than anything else. And the consumer does have what I call an appetite for, or they have a level of spending appetite for entertainment that people are underestimating. And I think people are underestimating, I guess, in YouTube investor place. Because, you go back like 6 months, I guess a lot of people were very bullish. I wasn't bullish then. I got somewhat kind of ish, like I do what I always do. I buy it even though I know it tends to be overvalued, and very small chunk, and then kind of look at it. And then if it were to correct, then I actually build out the position. Similar to how I'm doing that with Adobe. Like, I think Adobe is really overvalued right now, but it's there because I have plans to build it into an actual position in the future. As you can see, it's designated as a core holding, yet it's nowhere near something that would be a core holding, right? It could never get to the prices I like, that's fine. But Netflix it started to get into the prices I actually do like. Okay, so I'd first ask you, kind of like a counterpoint, why specifically do you think, it is a new tier investment? I'm just curious, and then we can go back and forth from there. Again, it's unfortunate that we're doing this or I'm doing it from the verbal stance and you're doing it from the text stance, because it makes it a little bit difficult to have a conversation. Netflix new tier player. But I actually do love the lingo here. I love using that word or terminology, so it being used against me is awesome too. Well, some might build back percentages. Yeah, I don't view them in the same league either. All right, so remember to at me from Capital Mindset. I will try my best to always look through it, but my eyes are looking for Capital Mindset. So if you at Capital Mindset, I'm more likely to read it. So any updates, thoughts on Dropbox? Do you believe is being clumped together with the work from home? I mean, Yes and no. I wouldn't really consider it like a necessarily work from home play as much many as people might think that it is. Um, I think that it's not going to be a fast grow. I think I have it projected to grow like 8, 10% next year, which is not all that much. They've historically been doing 12 to 14%. So growth will kind of slow down. I do expect that because things are starting to get, well, especially if you think about Dropbox as kind of like a discretionary spend, that little discretionary spend that a business might do when you do have free options, especially if you're trying to consider, okay, like I need to cut back on spending. What's going to go first? Maybe my Dropbox might go, stuff like that. But yeah, I do think it is somewhat being clumped up. Uh, I said Fabio is making deals with with that Venezuelan money. I don't even understand why you think I have Venezuelan money. That, but I mean, you could BP. I'll give you the benefit of the doubt because I always allow everyone to share their thoughts here because there's no reason to censor if you have nothing to hide, so to speak. So share your thoughts some more. I would like to know specifically why do you think that. All right, so if Mark says Dropbox looks like an acquisition candidate. I think it is an acquisition candidate, but I think that the CEO is trying to pivot the company in what might be the next, what actually might be the metaverse. Because I've already talked about on this channel that okay, there's the noob, not noob tier. You see there I go saying it, but there's the part of the metaverse that people think is Ready Player One, right? That's what they think. They think it's going to be Ready Player One. And then there's the alternate stance that I'm trying to kind of get out there is that it's going to be a lot of B2B aspects, a lot of potential. It's going to be the groundwork for a lot of B2B solutions that a lot of other companies that don't even exist yet will be building upon it. Okay, so these companies that I'm talking about, it's not that we're going to be profiting from those companies and investing in those companies that don't exist yet because you can't. But we don't even know what kind of businesses will be there. And the metaverse, which is this, metaphorical or metaphysical thing that doesn't even really exist yet. It's starting. The building process is starting. Could be the groundwork for that. So I think it's more like I've seen the word used, Internet 2.0. I think that's more precise way of describing it. It's like how the internet changed the world, but hopefully we can invest in it in a more responsible manner than what people did during the dot-com bubble, right? So I think Facebook's one way of doing that, and Dropbox in some ways is trying to pivot itself into that. And Dropbox is a B2B solution. Well, it's also B2C, but the B2C is debatable. Mainly the people who get it are people who are self-employed and stuff, but it is in that sense a B2B solution. And a lot of their other solutions, you see look at what they're buying. They have HelloSign, they have a bunch of other, DocSend, I think is another one they bought. So those are all kind of compiling into a B2B solution. And then they're trying to say, or you hear Drew Houston talk about the metaverse, you can kind of put the pieces together. That's really what the metaverse will really be. That's where the money's at, not really in your NFT tokens, putting them on your face or whatever. But yeah, they're kind of like a yield play and then, seeing if they work out. So like you can see it in the portfolio, it's not gonna destroy me if it gets cut in half. I'll see it, I'll feel it, but it's not gonna destroy me. But it's there, and I do believe in it. Otherwise, I wouldn't be investing in it. I do believe in it. BOC, unless you'd rather not talk about it since it has such a low market cap. No, I can talk about Boston Omaha. So Boston Omaha Corporation is a little unique company. There's no, let me be clear, like Zach, I don't do dedicated videos to these small caps, even though in reality, I did say I was going to make a video on Boston Omaha, and I still might end up doing it. If the channel, for example, were to become very large at one point, in that moment, I would make it a very hard rule on myself not to do it because I don't want to incur any sort of risk, but I also want to have the ability to purchase it without any, like for example, I want to be able, if I think a company is a good company, regardless of size, I want to still be able to purchase it. And then the only way someone will see it is kind of like basically like my quasi-esque 13F filing that I do through the portfolio, where I disclose allocation percent allocation and that the position isn't there. So I'll still do that, but I won't make a dedicated video on it because it almost seems like promotion of it. So I'll just not even mention it. It'll just show up and then that's about it. Or then when I'm out of it, I'm out of it. I won't discuss it because that can be construed as almost promotional. I just want to avoid that entirely. And also, maybe I will discuss it in the past tense if there's like a learning moment to be had of it. And so I leave that as kind of like that room open for it. And of course, I'm always willing to hear out the audience's kind of inputs, whether or not I can improve upon that, but remember, or keeping with the theme of trying to do more good than harm, right? That's the goal. So, etc. But yeah. So to talk about Boston Omaha, and like I said, there's another stock I don't do videos on because of its size, but if I'm asked about it, I do talk about it. Some of you already know what stock that is, but Boston Omaha, yeah, you could say that, yes. So Boston Omaha Corporation is a nice little tiny mini Berkshire. I use that word sparingly because there's a long way to go before it becomes an actual mini Berkshire. I'd say Markel Corporation is more akin to a mini Berkshire, which is hilarious because Markel Corporation owns a lot of common stock of Berkshire Hathaway, and Berkshire Hathaway just bought shares of Markel, so now they own each other. So I think that's funny. But Boston Omaha Corporation is really small, and actually if we pull them up, BOC, I don't have to put stock, this is already Google Finance. So BOC, it is at $585.95 million. They are a holding company. I believe one of their holdings, the value of that holding is about like $200 million. And right now, it's not saying that that's cheap. Holding companies will always trade at a discount to their holdings, by the way. But if you actually take a look at the overall IRR that they've been able to achieve over a long period of time, take a look at their letter to shareholders. They actually do a nice letter to shareholders, by the way, if you're interested in reading that. But yeah, no, it's an interesting small little play that I do have in the portfolio. I don't consider it a speculative stock, so I'm bold enough to say I don't consider it speculative. I do think that it can turn out really well in the future, but with the caveat, there's also some risk, okay? And the risk is that they can get wiped out in a bad business or a bad investment. Right now, they're small enough that it can maybe take one bad investment that they probably are over leveraged to that we don't see coming, and it just happens, right? They're not Berkshire Hathaway. So that's why I use the word sparingly, that they're the mini Berkshire Hathaway, okay? So yeah, just hopefully that answered your question there. And yes, I'm excited to pull it out, but because I do want to also answer the question. Right now, I'll tell you so far what I found that I'm a bit concerned. And I know that some people are not concerned by it, but I'm concerned by it a little bit. Not like, oh, it's X'd immediately, but the debt levels. The debt levels are a bit of a concern. So when I look at something that's a competitor like Netflix, for example, Netflix is a little bit better capitalized to actually invest in new content than something like Warner Bros. Discovery. While the debt servicement is not necessarily a problem, it's the optionality that the company has to take on more debt to then fund, business ventures. They don't have as much optionality as other competitors do. And of course, when you consider and you expand further that you're competing against now Amazon, you're competing against Apple, you're competing against all these other guys, they have massive war chests to then plow into content that, they don't even need to take on debt. Even Disney, to an extent, is better capitalized. Now, Disney does have a lot of debt now because of the pandemic, but, Disney was the one who, I think, one of the two companies, it was Brookfield Asset Management and Disney, that issued 50-year bonds. Think about that for a second. 50-year bonds, all right? Someone lent them money. But we already discussed who really would lend something like that money, and it makes sense when you think about it. And I discuss it further in the video that will drop that's 51 minutes long. It's more about banks, but... All right, so more questions. Okay, so I'm going to put this away for now and then just look at the questions because that's a little bit distracting. Yes. Dropbox it's like a cash flow play at the present moment, but yeah, they don't necessarily have a big moat. That's absolutely true. That is true. They don't have the biggest moat in the world. There's bigger out there. But That doesn't mean that they can't be competitive. I think that, they're not priced to have a big moat. Let's kind of face it. They're trading that way because of that, okay? And look at not Baxter International, sorry, Barry. Barry's a company that Sven Carlin covered for a moment. And I'll tell you, Sven Carlin made it sound like he was bullish in one video, but I rest assured he's not bullish because he actually wrote one article about it. And so he wasn't bullish, and I think he was correct in not being bullish. Because when I took a look at Barry Corporation, which I'll actually pull it up now, because why not? Let's talk about Barry. Barry is a company that appears to be cheap. Okay, appears to be cheap on a cash flow basis. I think the yield is also about 10%. And when Sven Carlin was talking about it, it was around here-ish, around here. And then he actually wrote an article still around there as well, where he said that the debt is actually a problem. And I actually agree with him on that. It's not a problem, but it is a risk factor. And also when you consider to answer or to kind of bring into that your question here or your statement, it doesn't have a big moat. It does the packaging for the brands. The brands are the ones who have the moat. Barry, at the end of the day, has maybe a moat when you consider operational moat. So the other competitors might have a harder time building out the capabilities that Barry already has. Yeah, that's a moat in and of itself. But it's not like a brand moat that Barry, I must have Barry packaging. The consumer's not going to be like, I'm opening my food. Where is my Barry packaging? Why doesn't this have packaging by Barry? They're not going to notice that. So it's different prospects. Now, no one's going to say, why aren't my photos stored in Dropbox? Now, Dropbox can do everything it can to be omni-channel or as open as possible so that you can use it across many different platforms as much as you want. And then that makes it convenient. That's a use case, right? And that gives it a semblance of a moat in that case. But that can always still be toppled by another competitor. That's not something that no one can just copy. So there's that. Then there's the stickiness aspect of it. There's the pricing aspect of it. So there's all these other factors. Now, if you can bundle enough products into one, you start to change the game up a bit. Now, I'll say that their convertible notes, their buyback that they did, now looks kind of silly. They probably shouldn't have done that in hindsight, but whatever. It wasn't as egregious, okay, as other forms of capital allocation. So I wasn't like, oh my gosh, I have to sell out now. Okay, so what happens when a company acquires another company? Oh, okay, so I saw your question. I almost skipped it, by the way, because please, it's just a friendly reminder. I'm not like yelling at you. Please, at Capital Mindset. So then it's just so I don't skip you, because I hate to skip question. I want to answer everyone's question. What happens when a company acquires another company? Acquired Zynga. What does that mean for Zynga's market cap? Will be added to the TWO's market cap. What exactly happens? Well, no. Okay, so if they issued shares, depending on how they did it, they could issue through debt or share issuance. If they issued through share issuance, and let's say the market, all else being equal, you always have to say that, by the way, when you're giving an example, and I always want to highlight that that is the case of the scenario. All else being equal, if it was acquired for 100% shares, then whatever the pricing of those shares are at that given day by the market is now the totality of the market cap when you take the total new number of shares by that. So it doesn't necessarily add to the market cap like that. It does in a sense when you think about the new shares that are created. So for example, there were a bunch of crazy wacko videos from some people. I don't even know who, but I just know that these existed because I remember watching them back in 2020. It was funny as a joke. And there were people saying that the market cap grows as the company issues shares, and that's bullish. Yeah, and I know it sounds silly, but people actually were saying that. So the premise of that is because when you issue new shares, you have the total shares outstanding multiplied by the share price that the market is giving, you get market cap. So if you increase the shares, you increase that multiplier, right? So that's what happens. And then there's depending on if you take on debt. Well, if you take on debt, it can still affect the market cap in maybe a negative way. Maybe the market, in that case, let's say the market says, there's a 50% sell-off because you're buying all this company with all this debt and the market doesn't like that. Yeah, in that case, it has affected the market cap, but maybe not in the direct way you were kind of implying by the question. I see the at Capital Mindset. But just at Capital Mindset. Ah, I see. Okay, you use the terminology because you're a fan. Haha. All right, so British Petroleum knows the oil industry, and Venezuela's oil has gotten more heavy sour, except Capital Mindset has a stockpile of light crude. Yeah, no, a lot of people don't know that about Venezuelan oil. It's not the best oil in the world. Yeah, but it's not really that good. But we have tons of it. Okay. I figured out why Netflix is noobed here. It was good when Netflix was 700. Now, yeah, no. But that's actually what some people were like. You know which creator I'm talking about. And I did receive a comment that was really funny. I take no offense to any comment, but the guy said that the video was worthless. That the Sven Carlin, Joseph Carlson's videos are full of evidence and blah blah blah. And this analysis was blah blah blah. Because in the video for his portfolio review, I only stated what stocks I thought were good, what stocks I thought were bad. I didn't do an analysis. I didn't claim it was an analysis video whatsoever. And so I kind of stated as such, and I was like, oh, if maybe you shouldn't watch my videos. You should watch more of Joseph's, right? No, I'm not going to be for everyone. I know that. So, all right. So, but yeah, he's an individual who used evidence-based analysis to figure out that Netflix was a buy at 700 and not a buy, or maybe more questionable buy at now. Right? I won't say that he's now selling, but he was questioning himself definitely, which definitely was like interesting to see that. Have you reconsidered overstock at these levels? Well, remember the overstock is a speculative investment. So let's take a look at overstock right now. Oh, and I didn't even we'll get to this, but let's plug her in here. And let's go back to the price here, and then we'll come back to that. But then we have to go to Facebook. I get caught up in answering questions a lot, as you can see, because I love to answer people's questions. I like to get to everyone's questions as much as possible, even though I was like, I'm going to do a Facebook analysis, and I just get sidetracked on questions. So overstock. So here we go. So overstock is down 5.33%. It's now down to $25.77. So as I stated in the overstock video way back when, I understand why someone out there, a lot of people might make the case that, overstock should be a core holding. I understand that because I can see it, right? I could see it back then. I could still see it now because you have the retail business that's profitable, and then you have all these other assets on the side that you're basically, let's say that's the call option. Well, for me, it's quite the opposite. For me, I see that the retail business is just there. That's the nice part. I wanted it for the speculation of what they have on the books, what they own. So because of that, that's an analysis you do internally with yourself. I say, okay, well, if that's why I'm invested in it and I don't care for the retail side, then, we're switching up the scenario here. I'm not that person who's buying it for the retail and has the optionality of the crypto. No, or blockchain. Let's call it blockchain because that's actually more proper. I'm looking at it for the blockchain aspect because that's my exposure to blockchain. And then the retail is the icing on the cake. All right, so I'm the opposite. So because of that, it has to be in my speculative side, right? And I force myself. That's my rule, right? So it's because it's not part of its core business, right? It's like if I were to see another stock or another company that, it does its core thing, and I don't care for its core thing at all. I'm looking at it, this other thing that's doing on the side that could pan out, might not pan out. And because of that, you see what I just said there? Could pan out, might not pan out. And if that's the reason why I'm buying it, ergo, for me, maybe not for you, maybe not for someone else, it has to go in the speculative bucket for me, right? That's kind of like a mental rule that I do. But I'm looking at it here, it's down 5.33%. I might build the position a little bit more, just bring down the cost basis, nibble down, and keep it within responsible levels. Because if it pans out the way I still believe in it, I think it could pan out. And if it pans out, it's gonna affect me despite only being such a small amount. So like, for example, hypothetically, let's say you think a stock is going to 10x, and someone might say, if somehow that it's going to 10x, oh yeah, put 100% of your money in it. But then what happens when you're wrong, or if you're wrong, or when inevitably you will be wrong once? You could have severe permanent loss of capital. But if you have 1% of your portfolio in a quote unquote 10x opportunity, or even a quote unquote 100x opportunity, well, you're probably going to feel it if you have 1% of your portfolio, okay? If you're going to feel it, like you're going to benefit from that. 1.5%, you're still going to benefit. Even 2%, right? 2%. But if you lost all 2% in a day, right? Are you going to feel that? No, that's like a day-to-day fluctuation, all right? That's not going to destroy you. So that's why, for me, these speculative assets, right? Careful, you see how I defined it. They usually tend to be full of potential, or I see them as full of potential, and that they have to execute. Like Zillow. Zillow's in there too. I mean, let's pull up Zillow real quick. And then we're going to go to the, not SG. I don't know what that is. ZG. So Zillow's down 11.05% here today. Look at that. Does it matter to me? Absolutely not. Doesn't even affect me really. So Zillow is one that, if it keeps going down, I can lower my cost basis here and there, and then I can kind of enjoy the speculative nature of it, because I do think it has a lot of quote unquote potential. And even in the Zillow video, this is what I stated, has potential. Okay. And if it executes on that potential, I can still stand to benefit from that. All right, let's go over and just take a look at Overstock. So you can kind of see, ignore this, but look at the 0% growth. Like it's cheap. There's no way around it, right? We're pricing in negative growth. Okay. I hope it's, by the way, it's visible and clear. It should be higher quality than StreamYard, but let me know, and I shall see it in the comments if it is or is not. Oh, don't tell me. Don't tell me. Oh, I think I figured out why it does that. Yes. I have figured out why it does this. Okay. That's very interesting. All right. So, I figured it out. It gets confused when something happens and I have to restart it. Yep, I know what happens. So when one of you retracts a message for some weird reason, yeah, when a user retracts, don't worry, I'm not going to oust your message that you retracted. The system here freaks out and it does not like that. I understand it now. So there's something weird that occurs when someone retracts a message. It disconnects the chat, which is fine. And then I have to like reconnect it, which is quick. All right, but now we're back. So yeah, OSDK, it appears cheap, right? And someone can make the case that at $45, we're discounting at 20%. We're assuming no growth. Even I think what can we assume, like 10% decline? Yeah, you see, like it's cheap. Undoubtedly, it's cheap. But I don't care for that. I don't really care for that investment. Now, I want to be very clear, or show something actually that's picking up. The PE is pretty low. 3.23 is actually what's pulling out from Google, by the way. And then on a cash flow basis, it's a bit more expensive. So, but this is not analysis on OSDK, so we're going to go back to Facebook in a sec. But yeah, the other stock that I was talking about was Zillow. So Zillow is the other one that's a bundle of potential, but that's all it is. So let me go back up to see, so I don't skip anyone's questions. For the thoughts on Overstock given the potential. And this question also was talking about construction. And so, yeah, the potential slowdown construction can hurt Overstock's retail business. So on top of that, yeah, you have that to consider as well, which makes it even better. Okay. So that could cause a slowdown in the retail business, which I have already kind of projected. I think that they're going to decline by 6% to 5% over the next coming years, to even 10% or 15% on the highest end. But I do expect that retail side of the business to decline. Again, since it's a speculative side of the portfolio, I don't really partake in massive amounts of continuous research, so those numbers can be with varying degrees of accuracy. Okay, so on to this. No, I have not said my thoughts on Toll Brothers report, and in fact, I think we can actually pull that up. But let me pull up Toll Brothers and talk about it, because Toll, you guys remember from the last live stream, I think on Sunday, I talked about the problems with the builders and a couple of the factors that we should be paying attention to. Now, I think Toll Brothers they reported earnings at topped estimates. Yes, so right here. So they reported earnings at topped estimates. Blah, can't speak. But their guidance. What was their guidance again? Home sales grew. But my problem is, how accurate are their forecasts? Because that's while demand is still solid, because the builders are always super optimistic. And I don't think the market necessarily is pricing them in for that optimism. And we'll talk about when I do a video reaction to, what's his name? There was a debate I saw with Peter Schiff and this other guy. I forget his name. Ross Gerber. Oh my gosh, guys. I've got to tell you, before you guys see that video, I am cringing so hard at that guy. But yeah, I'd say that I could probably do like a I don't want to say I'm going to do an earnings call because I might not have the time to do the earnings call, but this is a video that I would like to do an earnings call on. Okay, so Pugnash was saying that. What was Pugnash saying, Julius? Yeah, what was Pugnash? But I like the term though. Just as you increase money back shares, but must decrease market cap by that logic. Just issue shares to increase market cap. Buying back shares just decrease market cap. Yeah, no, I know. That's what people were saying though. All right, so what are your thoughts about going in and out of the same stock? Do you regret not selling Google, for example, at above 2,700 and buying back, increasing your ownership? No, I don't regret it. Obviously, like, okay, let me just tell you. Obviously, if I know with 100% certainty that a stock is going to be at 2,700 and then it will go down to 2,000, right? If I know that with 100% certainty, which is not a possibility, of course I will engage in that. All right, of course I would. But because I live in a world where my ability to be certain is not necessarily there, I don't engage in that unless the stock is egregiously overvalued to the point where even my estimates. So like I stated before, and I think when I stated or talking about your situation or your previous question about dividend stocks and stuff, what if it's in the realm of debatable, right? And that's when a stock I own is up a lot and it's in the realm of debatable. It's debatable whether or not it is overvalued or not, right? I have my own measures for, how I determine if it's debatable or not. I think that I'm not biased in that way that I would say, oh, it's not debatable, that stock is undervalued, or it's not debatable, that stock is overvalued. I think that I'm good at that, at least in terms of saying, okay, well, it's debatable that Google is overvalued. I thought at the time, because I did a video on Google, right? What did I say in the Google video? It's overvalued, my opinion. I'm not selling because I think it's debatable, right? So other people can have different projections out. And remember, based off my cost basis, if the return still generates about 10% on that price, I'm still happy, right? I'm still okay with that because off of my cost basis, it's good. It's okay. It's still going to generate over the longer period of time that I held it, good returns. But, it more often than not, why I do that is because playing with the soap sometimes tends to be a problem, right? And and I tend to not like or enjoy making too many moves. I don't like to reshuffle things too much. There's some stocks I'm a bit more active than others, absolutely. So for example, commodity-based and cyclical-based companies, I'll tend to be more active with those. In hindsight, all the stuff I said about the liquidity crunch, technically speaking, the best move would have been to get all cash, right? Here I was talking about liquidity crunch, saying, some of these stocks are going to go bad, right? They're not going to be good for things. Should have, could have, would have, right? But I tend to not enjoy doing those kinds of moves at all. I don't think they're successful long term. I don't think they're even healthy mentally. So again, getting into like a bunch of other aspects, I tend to just kind of like to buy things and kind of let them ride out. It changes my purchasing behavior, absolutely. So, it changes maybe what I really look for in a stock or what I look for in a company or what kind of sectors I'm looking to allocate to more so than others. It does affect me in that way. An example was like the REITs, for example. I just avoided the REITs and I still don't have any REITs, but I used to own REITs. And then the banks too. I've only just been buying banks back, only Bank of America. Funny enough, seems like the day after Bank of America, which is bad, by the way, not a good thing. I'm not happy by that. But Bank of America just shot up. Oh wait, is it down? No, it's still kind of up. But I'm hoping it continues so I can actually build the position. Because this is my favorite bank. This is my favorite company bank, Bank of America. JP Morgan Chase is another really good one, by the way, but Bank of America is my favorite. But even then, I'm still I'm not jumping over obstacles to buy Bank of America shares right now because I still do believe, we're still going through the liquidity crunch. But, I think I answered your question. If I didn't, let me know. And then just ask the question again. Provided that you don't incur any taxes, you do this in a tax advantage account. Well, if it's in a tax advantage account, okay. That might change some. Yeah, I should have read that part of the question first. That actually might change my answer a bit, right? Because if it's in a tax advantage account, I'll be a little bit more trigger happy. Again, if I'm even just like somewhat confident that it's pretty overvalued or decently overvalued. Not say overtly overvalued, because I want to refrain. Overtly overvalued, screw taxes. I'm taking my profits, right? Even if it's a short term. If it's a short term, for example, a lot of the Palantir shares that I sold, not all of them, but a decent chunk, actually, I think fell under short-term capital gains, right? Because we bought it close to IPO or just after IPO, actually. We wrote it up, and then you can check out the video of when I sold. I always forget the prices, but there's the images on that video of when I sold, and some of those were short-term capital gains. I didn't care about the taxes. I want my profits, right? I know that the price was egregiously overvalued, and I was like, oh, okay, if the market's going to give me this, give me my money, I'll pay the tax. I don't really care. It's better than what I would otherwise get, if I were to be selling now. If I would have held all my Palantir shares through all that gain and rode all the way back down, oh my gosh, I would hate that. Oh my gosh, because it would have been way better just to sell and incur the tax than just to hold now. Now I could technically, in theory, buy back all of the shares of Palantir I ever had at a lower price than what I ever sold it at by far. And even I think when I originally bought it, right now, let me see, let me just remember what price is it at now. And I think this is a company that most people who invest in it do not even understand what it does, which is the funniest one. It's like the funniest case study I've ever seen of it. But yeah, I hope that answers that question. Mike times every bottom. I mean, yeah, is that an incorrect statement though? Is that an incorrect statement? We all know that that's 100% true. Okay. All right. So, by the way, if you guys are liking this live stream, I'm going to like simp right now. Feel free to leave a like if you guys like and enjoy the live stream. So that's me simping for the live stream. That's as far as I'll do it. So did you know Lafufu bought TTCF in 2021 on margin because he thought it was a safe investment? No way. Do you have the video link? Send it to me, please. Please send me that link. I would love it. Darn, 5 more viewers. What are you looking? What are you talking about? 5 more viewers? Oh, you mean in the stream? I mean, we have 79 according to my statistics. 79. But people go in and out because these live streams go on forever. So we have like 307 total unique viewers, and then 80 right now, 80 concurrent. So still for now, these live streams are pretty small, so I can address all comments, which is nice. I like that. But yes. Capital Mindset. Sweet Green is overpriced sugary salad restaurant. Sounds like LeFou's. Yeah, you probably were like, Sweet Green, what is this? And you just looked into it. So it's a restaurant, Sweet Green. Yeah, because I accidentally found it. Heck, we just found a new stock, guys. Sweet Green. What is this? Sweet Green is an American fast casual restaurant. What? This is publicly traded? This exists? Guys, it was not a mistake. I'm totally trying to pump this stock. I'm trying to get this stock to like $50. I'm not kidding. Sometimes the analysis is actually really funny. When some people are like, "Oh, it's $20 now." I saw some videos like, "I totally see the stock being $50 in like 5 years," and they don't say anything else other than that. That's all they say. Just imagine. Just like that's the analysis. All right. Fabio, I just texted you. One of my viewers thinks that stocks dropping and the amount of their dividends next day is just a myth. Thoughts? Ooh, okay. So let me actually address your comment, because by the way, check out Cole's video on dividends, because we were gonna have a quasi debate, but then I realized he doesn't actually. I misunderstood him, so we're not gonna have a debate now. But this is Cole's question, Fabio. As I just texted you, one of my viewers thinks that stocks dropping by the amount of their dividend on X dividend is just a myth. Thoughts? No, it does that because of arbitrage elimination, right? So you kind of learn in one of your finance classes. I forget which one you're supposed to learn it in, but I think they repeat it multiple times. But arbitrage is technically, by definition, the riskless event where you can find something for one price and then sell it in another market for a higher price. And supposedly in this arrangement, there's no risk. So technically when you say arbitrage for Activision Blizzard, that play, when you can buy Activision Blizzard now and then sell it to Microsoft for $95 a share, that's not technically arbitrage because there's implicit risk. So arbitrage would be like, that for a fact that I'm buying coffee beans at like $10 and Cole here is selling coffee beans for like $5. You know that I'm not going to change my price, and you are in a position where you could instantaneously buy them off of Cole for $5, sell them to me for $10, right? You're in that position. That's arbitrage. That's traditionally what arbitrage is meant. So arbitrage elimination is something you also learn about in finance when in the past, there used to be a lot of opportunities for arbitrage. In the modern era, technology advancements and understanding have for the most part, eliminated most existences of arbitrage everywhere. And the stock market was one of the first places where we actually saw that happen. So as technology improved slightly, the stock market is very well watched. And so buying, for example, on the ex-dividend date is fruitless endeavor. It's for the most part, because you're probably not going to, it's not a viable strategy long term to do a dividend capture strategy. Most people find that out the hard way. A lot of new investors want to engage in that, and they learn about it, they read about it, because it's a thing that used to happen in the past. Today, it's not really viable. In fact, you don't have the speed necessary to do the proper execution as a retail investor, so it's almost not even worth it. You're just getting lucky if you succeed in it. But yeah, the reason why is the arbitrage has been closed, again, by the market forces. Market forces have closed the arbitrage, so you see it, and a lot of retail investors look at it, and they, this is not saying that you're saying this, Cole, but a lot of retail investors look at the stock go down on the ex-dividend date. They don't really understand the mechanisms for it. They just think it's magic, and like the stock market just like knows that the dividend's coming out, or the dividend's being, it's on the ex-dividend date, so the people on that day that hold it are going to get it. So it just goes down by that price. It's not really because of that. When you break it down, it's because of what we call arbitrage closure, right? So the closing of arbitrage across a variety of markets. And the dividend ex-dividend date stuff is part of that. So probably answered that question, but, now, well, I'll get into that in a second. Government mindset, what are your thoughts on oil supply at this stage? I think that oil supply is going to... well, the war threw things out of proportion. Let me just say that. The war threw things out of proportion. For example, as bad, let me be very clear, because it might be misunderstood. The war is bad, and I disagree with the war. I think the war is a bad thing, okay? But, well, there's no but about it. That is a statement and an isolation. Now, as far as my investment in oil, I had no idea this war was really going to happen. I had some speculations. I memed about it, right, on the Instagram, right? I put a meme about it before Putin invaded Russia, not knowing that Putin was going to invade Russia. It's not even my meme. I didn't make the meme. I just saw the meme, and I just posted the meme. And it's like, so it was about, Putin invading Russia and how to hedge your positions. And this was posted on February 13th, right? So I didn't actually think it was going to happen, but, it did happen now, and that had a massive amount of implications regarding oil, right? So it kind of threw everything out of whack, and then made my investment better, right? My investment turned out even better. I already talked about my Gazprom investment. So my Gazprom investment, I already made it's an old video now, but I made the video discussing why I was selling Gazprom, and I still sold it when the market was open. I still locked in a lot of my gains in the company. And then the market presented me an incredible opportunity. We'll see if it's an opportunity or a curse. If it's a curse, it's going to take away my house's money because it's less than the profits I made, so it's fine. But neither here or there. Where now I still own Gazprom, was able to buy back all the shares of Gazprom right before the market just closed it. So remember that whole, and I repeat this because I said this in the last live stream, but just in case you guys weren't there, remember that whole saying from Warren Buffett, invest in a company that, if the market closes down like next week, you're fine holding it. Well, I'm living through that. My Gazprom shares the market's closed. A lot of people thought, when you buy Gazprom shares, I don't know if you guys think this, but you guys know that when you buy Gazprom shares, you're not actually buying shares or giving money to Russia, right? You guys know that that's not how it works. If anything, I was more than 99.99% likely that I was either buying them from an American fund or whatever. So Americans were getting my money because I bought the ADRs, the American ADRs. So whoever was holding it was definitely not Russian. It was probably Westerners. So I basically just gave them cash, and then I took their shares off their hands. But anyway, that's a little bit of a rant there, more than anything. So oil supply, I'd be less bullish on oil than I was before. I was bullish on oil when people were like, oil's dead, right? Now I walk the walk. Everyone's kind of more bullish on oil, so I'm less bullish on oil. And then I'm not out of oil completely, but you can clearly see it's been not severely, but it went from nearly over 10% of the portfolio to now just at 2% of the portfolio. So, there's 3 comments up. No, no. Oh, you meant that comment. Okay, I already read your comment. Goal. Yes, I have the link. Capital Mindset, Julius Caesar wanted 69 more views. Yeah. Oh, you guys want 69 views. What if I lock it at 69 views? I was always wondering, like, what happens if like a YouTuber wants to actually restrict the amount of people that can watch their videos? Just like, because it's like they think it's like quality, and they're like, I'm gonna restrict how many people can watch my videos. Only 69 people can watch this video. That'd be funny if they add that feature. Arbitrage sports betting. There you go. Not too many opportunities like these, though. Yeah, you got that. One thing I noticed Jeremy's latest video is that he made many other stock channels will always say this: insert stock is high risk, high reward, but then talk about it like it's a guarantee. Yeah. I mean, yes. Yeah. They say that I think to cover their butts. Again, remember the majority of their profits are really going to be made from the users who are quote unquote learning. That's how you kind of get away with it. So I actually was talking to a lawyer this weekend, or sorry, last weekend, and it was a little bit about this, right? So not capital mindset, but like the YouTube landscape as a whole, and particularly a particular company that shall remain unnamed, but you guys all know what company it is, and it's led by a very influential finance YouTuber. That they're not technically, well, they're teetering on the edge, but it's not, as long as it's teaching. He thinks he can probably get away with it. If he said if the SEC really broke down on them, then he's in trouble. But and this person is was, I think now they're retired, was a securities lawyer. So I'll just say that. But that was the conversation that I kind of got taken away from that he's teetering on the edge. He's kind of playing with fire, but not overtly illegal, as long as he's not telling people what to buy. If he's implying and he tries to make the argument, of course the SEC kind of catches that and they go in spirit of the law, he's breaking the law. Yeah, that's a problem. All right, that is a problem. All right, so we see the damn magic at play. Ukraine capital mindset. Is there I think there's likely still arbitrage, because despite the appropriate adjustments, retail investors will trade on top of that, oblivious of the execution date. Yeah. So there's ignorance arbitrage, and of course hedge funds try to close that. Hedge funds are always trying to, like, okay, let me just say this. There is an saying or a common belief that hedge funds are evil and they're trying to destroy the average investor. It's not that they're trying to destroy the average investor. It's that the average investor is an easy victim, okay, because of ignorance, right? And it's not to say the average investor is stupid, because people can be very smart but just not understand a particular thing. It's to say that they're new, and newer to anything is vulnerability. A hedge fund can take advantage of that vulnerability and play against it, right? And that's why payment for order flow is a big deal, because you can get that newer investor. You can profit from that newer investor. Okay, so that's just some added thoughts there. So there's still arbitrage, but it's being played on a high level. It's very difficult for you to be playing in that arbitrage. It's possible, but very difficult when you're just using a regular brokerage account with regular tools and stuff. If you're investing for the long haul, it don't matter, right? So just a little bit there. Okay, so I want to try. Want my attention. No worries. Family first. This video will be here forever. Your children won't always be children. Okay, so the kids, you don't worry. You can always just put me in the background. Sometimes I'm just rambling. All right, so I went to Bank of America and Chase the other day. I saw a huge line in Bank of America, but 2 people in Chase going all in on Bank of America. Yeah, I mean, that's the research. That's the research. And I see Julius appreciates the research too. That is top tier research. Okay. Hey, I need help investing. Hey, I need help. I invested most of my money into Smile Direct Club. I'm down significantly. I need portfolio recovery. MU cost is $6. Should I average down to 3? Start a position. Yusuf, unfortunately, I cannot provide financial advice. I cannot do that. If you want to, if you have, did Smile Direct Club, man, I really feel bad. These stories hit me because, I don't know if you've emailed me in the past, but if you want to email me about it, we can have an email conversation about it. But I really feel for you, and I want to know more about where you learned this from or how you learned this from. But Smile Direct Club, I can only imagine where that came from, and I really am sorry. I wouldn't say that you should panic buy anything. Okay, so yeah, don't panic buy anything. Don't look at it like that. Okay, look, if anything, at the very least, look at it like a very, I don't know what the numbers are, but look at it like a very expensive lesson. No, there's no training whatsoever that I charge for. Because I see your new comment, Yusuf. There's no training or anything like that. In fact, training lesson number 1 in finance. Don't pay anyone for training in finance. That's on YouTube unless you're very careful. I mean, okay, so like for example, if you're learning lessons on accounting, because I agree with Chris on this, absolutely, and I agree with this with every profession. If you're looking to learn about that profession and as to what it is that they do, of course you can pay a professional in that industry for tutoring services. But I don't have a offering that does, trades and stuff like that. I don't believe in that. But you can watch the videos that are free, and they give, I hope, a good amount of information for someone to learn. But if you want to, I mean, you can email me or message me on Instagram, and I can probably talk to you a little bit about some stuff. But let me just be very clear: it won't be investment advice. Yeah, you see, there's nothing wrong with. You see, you can't even say, this is the unfortunate thing. I can't even tell you, and I don't want to say it because I'm not going to do it. I can't even tell you to sell it. I can't even do that, technically speaking, because that's financial advice. So I can't tell you to sell it because if it goes up tomorrow, you're gonna blame me. Well, maybe not you, but it could be construed as you blame me. So I can't even tell you to sell it. I can't even tell you to buy it. I can't do anything. I'm not gonna tread on that water. But yeah, I'd say that if at the very least, it could be very expensive learning mistake, like a very expensive lesson. Don't worry, I have a friend that, or a friend of a friend that lost $650,000 in Luna. Okay, so it can't be that bad. If it's that bad, okay, no, but he lost it all. He has a 0%. So that was a very expensive lesson for him. So, but yeah, if you want to talk about it. I mean, this community will be good to you, by the way, if you want to be a part of this community. I'm all welcome to you. And again, I'm very sorry that happened to you. And that's what Capital Mindset started. Yeah, dude, I really do feel bad for when I see stories like that, because I know where it came from. And yeah. Okay, Capital Mindset. I think 2023, 2024, the SEC will start passing laws against financial advice on social media as a way of pointing the finger on why the bubble. Maybe, but look, I think that's not really the solution. So, for example, I think that if you think there's a problem and you don't go do something about it, then it's not really that much of worth complaining. So a lot of people here, we all identify the problem. And a lot of us are also doing something about it too. Even the subscribers here, you guys are doing something about it. I see sometimes what you guys do. I see some of the subscribers go on the other channels and they call them out, right? That's doing something about it. So we complain about it, and then there's those of us that complain about it, there's those of us that do something about it. Not all of us have to make videos about it or start channels on our own. Some of us can just participate by subscribing and supporting the channels that are talking about it, and also keeping, by the way, each other accountable in the space that is being created. Because I firmly believe that I'm of the philosophy that good ideas will outweigh the bad. And I think that overall people are good, and those who want to help will try to do their part and help. And so I believe in that. That's my philosophy there. You're not asking for it, but I'm giving it anyway. And so, like, when I started Capital Mindset, I had an understanding because of my close friends that they were affected negatively by that person. And I got to say, that person was the inspiration of Capital Mindset. That's to the negativity of it. So from that negative, I hope that this channel is something good. So, even like a yin and yang moment there. But I think that, however, when I started Capital Mindset and it started to grow, I think past the 1,000, 2,000 mark, for sure the 2,000 mark, it's no secret that I'm open to hearing from comments. And I think the inspiration was when I did that video with that subscriber. I did a video with a subscriber, and I gave him basically 5 hours of time, because I do actually respect people, and it was free. It was completely free. And I spoke to him, and I got to know him really well. And you guys probably saw the video, or you didn't see the video, but it's there. You guys can see only the recorded part of the interview, where I allowed him to interview me, and I had a wonderful conversation with him. But there are others that I didn't have conversations with, but I read their emails, and I will respond here and there, that I feel really bad for, and it is somewhat kind of hard, because it's different from, like, I can take, like, hate or criticism and stuff like that. I don't really care about that. If you're sound with yourself, you're sound with yourself, and you shouldn't care what other people say. And that's not the point of this channel. The point of this channel is just if you find value in it, cool. If you don't find value in it, don't watch it, and that's fine. But the part that is, like, a little bit, I'm having a harder time digesting it is, kind of putting yourself in their shoes. A lot of people were are hurt a little bit by it. And like I said, with the hedge fund thing, some businesses, which will remain unnamed for legal reasons, but they prey upon that, and it's really unfortunate. Okay, and so my part to play is Capital Mindset. That's my part to play in it, and yeah, that's what I'm doing. So Yusuf, though, because this is meant for people like you, by the way. I am working hard when I can, because I also work a lot, by the way. So that's the hard part. I don't do this full time, so I can't do it full time. And I wish I could. If I could do it full time, I could get it out in a month. But I'm working really hard on a course that will be a pay what you want, right? And that's the point of it. It will be on YouTube. That's the final place where I decided to put it, because I was trying to do it on Udemy because it's a good platform, or whatever the other place was. I think it was the other one. But the problem with that was there was no way to make it, like, completely just free. So then it was, because it is like, if you want to pay, you can pay, but there's no point, or there's no push for that. And it's supposed to be for the newer investor that, sometimes newer investors, they don't have exposure to money markets. They don't understand what the heck's going on. And so that's for them, all right? That's for them. So they don't fall victim. And then your part, if you're a subscriber, was when those things are out, if you ever see someone who wants to have a course and you think the course is valuable, both of those have to be true simultaneously, you can share the course with them, so that they don't, right, pay $1,000 for a random thing on the internet, course by a guy who has no worked experience in that field, okay, which makes no sense, okay. Okay, enough ranting. That comment just got me into a big rant moment. Enough ranting. Ranting is over about that. Okay. Capital Mindset. Are put options priced into dividend payments? Wait, what? I don't understand this question. Are put options priced into dividend payments? What do you mean by that? Specifically, what do you mean? I need more clarity on that question. Capital Mindset. My earlier comments were about Ray Dalio's strategy with gold securities. 10% of the portfolio, if it runs up too much, he sells. When it drops, I mean, okay, so that's an allocation strategy. That's all well and good. I think that, that could be the case. But the thing is, how do you know if you're selling when it's overvalued? What if you just sold it and you were buying it when it was tremendously undervalued, and now it's just moderately valued? And then you sell it because of some arbitrary allocation. And then, that has a lot of assumptions with all else being equal. So then that's my only problem with that, with Ray Dalio's thing. But it's not like completely stupid. I don't think that. I think there's a strategy to it, and I can understand the strategy. Okay. Okay. Why can't I give financial advice? Because I'm not well, even if I was a financial advisor, I can't give financial advice without knowing your personal circumstances. So in order to give financial advice, paid financial advice, you have to know exactly the circumstances of the person and be licensed to do so. So that's it. Of course, in bantering, so if I have a discussion with someone, like a friend, and I talk to them and I say like what I'm buying and I tell them, what they maybe should buy, and there's no commerce between us, that's completely fine. But yeah, I saw someone just catch a ball, Yolanda Hines. I try to can't spell. No problem, Yusuf. So you see, this is Bob Smith is suspicious. Bob Smith is like, you're a troll. Well, everyone and anyone is technically welcome here. We don't really have any haters on Capital Mindset, which is, at the size, I'm kind of surprised. But maybe it's because I don't know. It's almost like it's an invitation for you trolls out there. Come on. You don't know me. I'm the biggest troll of them all. Yusuf, just sell it and all and buy VT. So you see, like, that is completely acceptable, by the way, from a chat. He can actually give you advice like that because he's not soliciting anything at all. And neither am I. I'm not soliciting anything. But technically, it's monetized. So, like, don't want to, teetering on the edge. So maybe language barrier. User could start by reading the legendary book that intelligent investor. Yeah. See, look at all this. You see, this community is really good. This is a really good community. Of course, I'm biased. It's the Capital Mindset community, so of course, Capital Mindset is going to be like, this community is really good. No, I think this community is really good. You'll find a lot of people here who, if you are actually looking for assistance and a lot of knowledge base, there's a lot here. Duty to your viewers: you can give financial advice. Face with symbols, mustache, mouth symbols. Yes. Oh, that's a good book by Strongman. Exactly. The bubble was created by the Fed themselves. You gotta see the new video, aren't you? Bob Smith, you're making me laugh with the Bob Smith's getting like aggressive. That's funny. All right, good ideas, but there will always be new bad ideas. Yes, there will always be new bad ideas, and I will believe there will always be people to fight those bad ideas. Right? As long as there are people as long as we're not silenced. Right? Usually, it's funny because technically the established players are the ones with the bad ideas, and then imagine if YouTube closes it off to the newer players, because that's sometimes what happens actually. So when a new space is created, the established players, they become the established players, and maybe they have bad ideas, and then they kind of close off it from new players, and then Capital Mindset can't grow to kind of combat those bad ideas. Even by the way, like I say, Everything Money has good ideas, but they have also some bad ideas, which I'll call out anyone in bad ideas, and as well as everyone should call me out when I have bad ideas. Right? I welcome that. I don't have all the answers, and I'm going to be wrong. Our stock investment bubble created a Fed because of a communist. Oh, yeah. Someone watched Robert Kiyosaki. I'm currently reading, enjoying You Can't Stop. Yeah, that's a good book. That's a good book. Inspirational book, too, by the way. It tells you, like, you can definitely do it. I'm looking to buy Markel. Bought it before, then sold it now. Want to buy it again. That's a company I don't do anything with it. I just buy it, and I literally don't do anything. Just let it go. That's what I do. I'm not saying you should do that. That's just what I do. More buy VT. Buy VT, short TTCF. I don't know about that one, but... Capital Mindset. I'm a nerd in tracking Jeremy's stocks. On TTCF, Honest, Corsair. He's down 60% and lost 1.1 million on just these three that he's invested 1.8 million in. Revenue, my avenue works, bro. Yeah. No. There's a subscriber that I still haven't done a video, but I'm working on it, who has made an extensive, I don't know, it might be you. I don't want to name drop you, but who has made an extensive tracker of Jeremy's portfolio. And it's absolutely hilarious. Back in the time when they sent it to me, they were only positive because of Tesla. Now they're negative even with Tesla. So crazy stuff there. My grammar is shot. No, my grammar's shot too, don't worry. Trump admin cut taxes. Corporations jumped on free money as the rates were already at zero. The inflated all the aspects of earnings. Excuse 102. But I'm just answering a single call. Yeah, no. It was a lot. It was a lot. Did you get inspired by investors? Would you mind sharing? If not, would you get to the source of ideas that spark deep dives into sector/companies? So You talking about like investing ideas? No, I'm always just looking around. I will take inspiration from those around me. I'm luckily right now where I work, it's with people who are, also obsessed with stocks, for obvious reasons, and so I'll take ideas from them. Or like I'll have discussions with them too. I'll also look at super investors as well, just like everyone else. We all do it, and it's not. I won't say like, oh, I don't look at what Michael Burry invested in. No, I look at the 13F filings. I'll look at all these 13F filings. I'll see what Berkshire invests in. Sure, why not? And then I'll look at it, see like, do I agree? Do I disagree? Because you have to note that you don't have the timing involved. You don't know when they bought it, how much they bought it for. You just know that they bought it, right? And that's about it. But yeah, hopefully that answers that question. I need more dislikes on my videos to know I'm doing the right thing. Yeah. Sometimes you need more dislikes. I've noticed since Google took down the dislike thing, you get like, I've seen it with like other videos. I don't know about that. I think it does, but I think I might be like too long-winded for people who don't like the videos. I think the Joseph Carlson one did get some dislikes because it was about Joseph Carlson and he has a big fan base, so they didn't like me talking about him. But yeah, I'm looking forward to the course. Yeah, so look forward to the course, and you can just basically take it, and there you go. I want to pay $-1. You can pay $-1, and I just start giving out dollars to take the course. Imagine that. If I was a billionaire, maybe I would do that. To a limit though, because then I don't want to lose $1 billion. Sven Carlin is a good free course. Oh yes, actually, Yusuf, go check out Sven Carlin's free course. Check his free course out. You might like what you see there. I will say it teeters. I already looked at it and I looked through it because when I was announcing the course, I looked at it for inspiration to see what it was. His is more on the theoretical, right? But it has a good amount of information and the theoretical still is valuable. So because his course exists and it already is free, I'm going to refrain from doing stuff in the theoretical realm. All right. Stuff talking about Ray Dalio and all this stuff. I'm going to let him do all that. And then I will supplement that with videos I normally do, which there's one coming out tomorrow. Funnily enough, reacting to Sven Carlin's video of macroeconomics and then giving my own take, and it's about 51 minutes long. That's more on the theoretical, and that should be kind of put to the later side if you're newer, by the way. So not really a valuable video for someone who's new. You won't, much of the stuff might not even make sense. And you don't even need to worry about like bank accounting and all that stuff and Federal Reserve and quantitative easing and all that stuff. It's kind of like weird. Anyways, if we're not sure, going back to the recession from the banks. Oh, for sure, back to the recession from the banks, yeah. Fabio, can't you just do the not financial advice, guys? No, because also I don't like to do that. I think Cole is kidding about what? He's a troll a little bit. Fabio, can you talk more about uranium ledge sentiment around nuclear has shifted huge in Japan, North America, restarting a lot of reactors? Okay, so I think that there is a lot of potential in the uranium space, but I mean, Kazakhstan is actually a place where we get a lot of uranium from, and I think there is a place for uranium within the portfolio on a speculative note because, it can be quite difficult to accurately predict these things. And oftentimes restarting or building reactor projects can take a decade. So keep that in mind. And so I think that nuclear has a huge role to play in the future. I am one of those, by the way, if you didn't know. But I think that we should really heavily consider nuclear as an option. Okay. Okay, so whether someone's a troll or not, we should always take it seriously because if we don't, then we'll help no one. Yeah, I agree with that. And like sometimes I don't know how to respond to someone's like surface criticism because then I'm just like, okay, well, it's not really addressing a point. But if it's ever addressing a point, I take every comment, even the critics, seriously, and I'll address their point and stuff like that. Because I think if that's the goal of the channel, then that's the goal of the channel. I have to act upon it and actually do it. And I know that's one of I see them comment a lot now, but one commenter in particular used to be a big critic of the channel, by the way. And it's because when I would comment back, I was non-confrontational, and I would comment back in a way that was respectful and understanding of their ideas. And now they comment very frequently. I won't name drop them. Don't worry. I know you know who you are because you've actually commented on the channel, remembering when you used to be kind of a critic of the channel. But I think that's like the strategy I undertake. And then Strongman is like, he's bashing down the gates, telling that creator that he's stupid. So it's two different strategies with the same exact goal. And that's why, again, we're like aligned in this unified mission to quell YouTube of the degeneracy, as so to speak. Common capital mindset. Can you make a video on VRM? I forget what VRM is. Sometimes I forget what a ticker is. VRM stock. Oh, Vroom. Oh, this is, this is that. Oh, I know who you are. Not you specifically. But, I know why you're commenting the Strongman CTF short position, because me, Kevin talked about this one, and he pumped this one out. It's already actually on the list. But I'm going to put it up to vote. Because I have for next week's vote, I have Professor at NYC Tesla Valuation. I have this other guy, and I have Jimmy Learn to Invest Portfolio Review, and I'll put Vroom as well. As long as you say there's not financial, the SEC can't touch you. Yeah, maybe. Capital mindset. I got a question here. Capital mindset. How much do you follow politics, and does that influence your investment decisions? I do follow politics. I actually have you might now be like, oh, you're American, you should be voting. I don't actually vote, and I kind of refrain from voting. So that way I can try to, at most that I can, in my mind, and it could be wrong or right to do this, in my mind, I try to remain objective on policy. So I know it could be wrong, it could be just stupid, it could be just a young and naive, but I refrain from voting myself. Not saying that everyone should. I think everyone should, go get your voice heard and whatever and stuff. But I personally don't vote. So when I sometimes make statements, I understand that sometimes they might be confused as, something political, and that's unfortunate. But that's the world we kind of live in. But like if I were to have come out with a video and said my thesis about Unum and ConocoPhillips at the time, it's almost unfortunate because I wouldn't be able to share that because it's so politically charged. Does that make sense? And it's not that I had a political skin in the game. I didn't vote, right? I don't vote. I kind of made that as like it's a more modern policy for me, so that I can try my best to remain politically objective, or not politically objective, policy objective, and try to evaluate each individual policy regardless of party, wherever it is, and how I can benefit from it or profit from it. If we're really getting down to it. That's why I did it. So for a monetary benefit. But yeah, I hope that answers your question. Capital mindset is buying course for -$1 considered arbitrage. Yes, it is. Yes, Sen Carlin uses terminal multiple. Oh my God, Cole, seriously. Jesus, LOL. Yes, Julius, I'm the same thing. So terminal multiples. Oh, you want to know the problem with terminal multiples? Well, it depends on the context of when you're using them. But there is an issue with terminal multiples. It's generally an assumption that you're generating. Okay, let me start from the beginning. Okay, a DCF is a common tool used. There are infinite variations of the DCF. Everyone will come up with their own versions of the DCF with varying degrees of accuracy. And some people, there's academically, there's different inputs that you put into the DCF. They can vary, all right? They can actually vary. The formula is relatively the same throughout with small minor deviations, right? And small minor deviations are actually more tweaks to the inputs, which is actually the most important part, the tweaks to the inputs more than anything. Well, the terminal multiple approach assumes that you're going to sell it at the end of a given time period. And there's a problem with that inherently. Think about it, right? How do you know what you're going to sell it for? Okay, how do you know what the ending multiple will be? Well, that's a statement that you somehow do know that. And if you're wrong, well, your evaluation is going to be wrong, right? And so if you do a 10-year analysis and you use a terminal multiple, well, you're betting a lot on that terminal multiple. I can tell you that right now. Because 10 years out from now, who the heck knows what the PE or whatever, or the price free cash flow, the company's going to be selling at. Some people might say, well, you can use the historical average. Okay, well, historical average, there could be problems with that. There could be skewed data, right? Could be that more recently, depending on the time frame that you're looking at. Maybe if you look 20 years down, the terminal multiple or the average multiple was 10. But if you look in the past 5 years, the average multiple is 15. Are you going to use 15 or are you going to use 10? Which one are you going to use, you know? So all these problems start to kind of outlay themselves, but that's basically it. Just sell 20-minute phone calls for $800 one day, you know, just no, it's not going to be $800. It's going to be 80K. 80K phone calls, right? That's what I'll do. That's what I'll do. And we won't talk about anything. We'll talk about, you know, just like, it'll be like just a hangout on the phone. We won't even talk about anything productive. So 80K for nothing productive. I can promise you that. Capital Mindset on Monday, you told me to buy calls on Snap, that it couldn't go belly up. What happened? I totally said that. I did. There's definitive proof that I said that. Capital Mindset, just so you know how far you are behind, it is 12:23 p.m. It's time when I put... Oh my God. Well, I'm 5 minutes behind. Fabio, you're an amazing person. Thank you for providing so much value. Oh, thank you. That makes me feel good, actually. I know I said that like a complete robot, but it actually does make me feel good. Please vote up the professor video. Oh yeah, the professor video for yes, Tesla. Yeah, I am pretty far behind, but I am far behind because I am far behind because I try to answer all the questions. So I vote third party as a way of stating the two-party system is broken. I mean, that's a way. That's like a vote in protest. Okay, I can get behind that too. Buy a share of TTCF, bask in the gains with Jeremy. I want to see it in your portfolio. You want to see it in my portfolio with? Okay. But thank you so much for the super chat. You sure you don't want me to do an analysis? You can ask for an analysis with that super chat. I'm grifting. All right, Capital Mindset. I know you already spoke a little bit about BOC, but thoughts on their new bill for rent? Oh, yeah, bill for rent. So I actually really like that. I like that idea. So there's a lot of demand for housing. And they want to build, right? They want to build. People need housing. They need more, right? There's not enough to go around. So building for rent, pretty interesting prospect. It's gonna be competitive, but again, small company, lots of if they execute well, asterisk right there, if they execute well, it can be very meaningful for their business and good cash flows. To be honest, let me tell you that right now. So yeah, I do like it. And yes, you read the annual letter. Yeah, keep reading the annual letter. If you are invested in that company, keep reading the annual letter, right? They do give, I think it's a very informative annual letter. And actually, reading the annual letter out of form of practice makes you even feel more like an owner than anything else. Okay. Fabio says that he does not need a driver's license to drive because Articles of Confederation guarantee a right to movement and Constitution was never ratified. Okay. Oh, yeah. I'm voting my shares. Yeah. So I do vote for my shares. Every time when there's a vote to be had, I do vote. And I actually do pay attention to what it is that they're going to be voting on. Very seldom will I just abstain. Sometimes I will, because sometimes I just don't know. If I haven't done enough research, I'll abstain from the vote because I just don't know. I don't want to just vote willy-nilly, but yeah. Fabio is a sovereign citizen. Yes. I mean, I am one that, I'm a Venezuelan who's now living in the United States. I see United States as a wonderful, wonderful country, by the way, very loving of the United States. But I see also United States as an idea that, can manifest itself in multiple parts of the world. And if this country were to go to S, it doesn't destroy the idea of United States. To me, I would, as a young guy, take it with me wherever I go. That's very philosophical. I know you didn't ask for that, but yeah, that's a little bit about that. 50 tons of LSD the country because of natural medicine, the government. Yeah. Capital Mindset. Have you ever purchased a stock without using a DCF? Yeah, of course. Oh yeah, like 100%. 100% I have in the past. And even like, not more recently, but like, yeah, I have done it before. Some companies, I'll do sometimes DCFs on very unprofitable companies, kind of just making estimates on projections of profitability, which is the hardest part of it, right? Making those projections and with a reasonable degree of certainty. But no, of course, I've bought stocks, and I'm saying this without the basis it being the DCF as to why. Oh no, yeah, like all the time, right? The DCF is a really good tool that I love to use. And again, it's my personal DCF, right? The one I use is my personal DCF. And I've done a lot to it over the years, and I've programmed it. And what you see is the Google Sheets. That's the front-facing end of it. And actually, by the way, we're getting it to the point where, do you guys like the interface, by the way? Do you think the Google Sheets interface is really easy to use? I'd love to hear your thoughts on that. But yeah, let me know if it's really easy to use, and then I'll explain why it is that I am asking. Fabio, oh, there's more here. Okay. What is? Oh, this is Oh, sorry. I almost skipped your question. I apologize. Don't hurt me. Do you like the Everything Money channel? I like them for particular things. I think their analysis at times is very questionable, and I've talked about it in the past. Live on one of the live streams here, I don't know if you saw that, Zach, but we did Sleep Number Bed a while back, just live, and in that video, we looked like Everything Money said there was like no debt. There was no debt on the balance sheet. No, they had debt. They just didn't look. And they were like buying it. So keep that in mind. Right? Keep that in mind. But yeah, that's I like them, but not like love them. Right? Okay. And I see a comment. I'll say this. I'll just get to this one right here. So you like the interface. And then I'm going to go back up to the questions. But you like the interface? Yeah, because the reason why I'm asking is we got it to the point where it's probably most likely going to be that's how the interface is going to look like. Of course, nicer without the top parts and the bottom parts. It's going to have the stuff, the visuals and stuff when the website's up and running in around August. So again, that's basically it. We're just refining the API so that the API is working properly. And then we're going to be refining, of course. Up until then, I'm just lazy. I haven't added back all the other metrics that I used to have because I actually refined some of the stuff in the back end, and then I have to rework it, go back. But it's been lots of work, and those metrics aren't super vital for me, but I do like to have them, so I have to go back and actually fix them. But I'll get to that. I'll get to that one of these days. In fact, I'll try to do it like this weekend. Capital Mindset. Do you direct register your shares on computers so to verify that you own them in your name and they aren't being sold to short sellers? No, no. I will in the brokerages that allow it, I sell them to short sellers. I do supply my shares when available to short sellers so I can generate that extra yield. I do that, and it actually is meaningful. Some brokerages don't allow you to do that unless you have a certain amount of money with them, unfortunately, but other ones allow you to do it. Allow you to do it. Baba earnings on the 26th. Yes, it's happening 2 days from now. Capital Mindset. What ideas for favoring position yourself for a wave of default on car loans? Okay, well, what ideas do you have for positioning yourself? So, okay, just a preliminary thought. I would, let's say that does happen. Let us pretend for a moment that we somehow are 100% certain that car loans are going to default, mass default on car loans. If I know that for certainty, somehow, I would be buying puts on Ally Financial. Or any bank within that vicinity, particularly ones with exposure to the worst kinds of auto loans. Okay? Or in some cases, depending on the manufacturer, I would be buying puts on the manufacturer. And the reason why I say puts is because limiting the downside, right? We're just in case we're wrong. But that's how my mind goes to. My mind goes immediately to that. I'd be looking for Ally Bank or any banks around in that vicinity that are heavily exposed to those, and those are the ones that I'd be like, I'd probably be buying puts on those. That would be like my food for thought. Oh, I know you have nibble stocks, but interested in your top watch list stocks. Okay, so you're asking about my top watch list stocks. I mean, to be honest, you know, like, oh, you want to know what my wife bought today? So my wife has been buying Target, and actually she bought Meta. So now we're getting more exposure to Meta. Actually, yeah, so in that case, I'm getting greater exposure to Meta than I'm really even showing you guys. Because you know, my wife's portfolio is not even included. So if you consider my wife's portfolio, now I'm getting exposure because we're a unit, we're a team, we're a household. My household is now getting exposure to Target and Meta, more Meta. So, but as far as my watch list stocks, Leggett and Platt is one I'm really like looking at. I'm totally pumping them, by the way. Yeah, pump the stock. I'm not even in it, but pump the stock. Let's get that stock to $50. No, I'm kidding. We're not going to move it, but yeah. Yeah, so that's what I want to say there. Will you vote for me, Kevin, when he runs for president? Probably not, because I probably won't be voting. Oh, you know what? If he runs for president, why not? Heck, for the memes. Why not? I don't think he'd win, but heck, for the memes. My vote is the breaking vote in Florida, and then it just pushes him over the top and he wins. Can you imagine? Career capital mindset. Why do you continue to ignore GameStop on your channel? What's your biggest opportunity for a generation? I ignore GameStop because it's not for the views, man. Not for the views. We need an entire change of the guards in every level of the government. Every level should have terms. I actually probably would agree with that. You know, I'm kind of suspect to the career politician. But yeah, this near here or there. Career politician. Yeah, okay, so you said career politicians next. Yeah, because I agree. We need a DCF on AMC. You want a DCF on AMC? Oh my gosh, like what are we gonna do on that? Thoughts on Ross Stores and HLF. I forgot what HLF is. Gosh darn it. Why am I not an encyclopedia of stocks? Herbalife. Oh no, Herbalife. No, I don't like Herbalife. I don't like multi-level marketing companies. Oh wow, they're down a lot recently. Yeah, I just it's not my cup of tea. I don't like these kinds of companies. Wow, they're even down below the March 2020 levels. What the heck happened? Yeah, what the heck happened to Herbalife? And I'm just now curious. Like, what It's like, is they getting destroyed? What's going on? Whole pandemic reality sets in. Oh, okay, so this was a good news about the pandemic. Downgrades, annual forecast cut, stuff like that. Okay, cool. So that's pretty much what's going on. Yeah, that's pretty much my thoughts on that. Ross Stores, more of a legit. Ross Stores, like, okay, cheap clothes. Definitely has a place in the market. It's down a lot. It did bounce back, though. Similar to how I say Snapchat might bounce back, but that's just a hunch. You know, I'm not putting money behind that. But yeah, no, Ross Stores does. I mean, it looks, actually, it's not even that cheap, to be honest. It's not that cheap on just looking at a forward earnings metric, but, you know, that's rudimentary. Yeah, I mean, I'd say Ross Stores is, between the two, I'd probably be more likely to buy Ross Stores. But we need a DCF on AMC. I mean, I can, like, I don't even know what happens if I plug in AMC. I quickly want to do Facebook before I forget. Okay, so let me actually replug in some of my Facebook numbers. Okay, so 7%. Oh, wait, whoa. And then I'm going to show you guys what I'm doing. I know I'm not sharing it right now, don't worry. And let me make sure it's not on these adjustments. Okay, so no. No. All right, so I'm going to show you guys my screen here. This is, you guys might remember this. So this is actually like, I didn't just pull the numbers out of my butt with the price targets, or not the price targets, the buy prices. So let me kind of show you what essentially we have to look forward here. So yeah, the reason why 160 is the price that I'm very excited for is if I keep it at this discount rate, for example, because I'm perfectly happy with that. If I get it at like 160, I'd basically be okay with like a 5-ish% growth rate, and they're projected to have about a 9-ish% growth rate, so we're already basically in that value play, which is why it was at this price and below that I was actually okay with buying shares of Facebook. If I increase it to 20 to get that extra margin of safety, because for whatever reason I'm very uncertain about my projections, then you could see that it's still at 181, which is actually where we're at right now. This is the assumptions I'd have to be making, and then 9% growth, I'd have to wait to about 145.89 if I was really that uncertain. But I'm not that uncertain with Facebook. So I'm actually okay with that 15%. And keep in mind, based on the macroeconomic backdrop, you might be noticing or remembering from my video showing the popular investor. Remember what he said? He said that he realized he was using the wrong discount rates, or his discount rates weren't accurate. Yeah, remember back in those days when I was doing really high discount rates, I'm doing less. I tend to, on average, be doing less egregious discount rates because of now the new nature of where we're at. So, but yeah, that's neither here or there. All right, so let me take that away. But yeah, that's Facebook. So I just wanted to do Facebook just to remind everyone. Why am I not active on Twitter? My eye just randomly saw it, but I'll get to your question because it's all the way down there. Let me get through everyone else's, but I saw it. There's a reason. It's because it's not a happy answer, to be honest. Is HBD on your review list? Yes, it is. And I like to sometimes when you guys request something, I like to put it here just in case I forget, and it is on the list though. All right, yeah, Google interface is pretty easy. No need for the fancy interface. So yeah. So it's going to be, okay, so pretty simple interface. Yeah, because that's the goal. I want it to be very usable. So I actually tested it with some old clients of mine because, fun fact, I used to be a very big tutor. That's actually my business that I had in throughout my college years. And so I still keep in touch with some of my old students. I call them students, but my tutoring students. I tutor them in massive variety of topics in college, high school, whatever. Even one of them was an MBA, which is funny because I don't have an MBA. But they knew that, and I tutored them for a very long time. So the parents wanted me to help them that, and so basically I would learn the class, then tutor him in that class, and then work it that way. So in here, mentally, I have some MBA experience, but I never went to get my MBA. I don't think it's necessary. Sorry for side comments. I get sidetracked a lot. But the question, what was the question? So the interface, I asked them about the interface. They said it was very simple to use. They watch finance YouTube, and then they saw, for example, Everything Money's. They said theirs was very complicated to use, and then they liked this one. And also on top of that, they're very differently built. I can tell you that Everything Money's model can be built very quickly. Very easy to build theirs, but that's neither here or there. That's neither here or there. Sorry for the little jab there. The problem with Everything Money is the debt pillar is that they look at long-term liabilities, but SMBR had a buttload. Yes. So you remember that. You definitely remember that live stream for sure. Or you also looked at it yourself and you found it yourself, which in that case, yes, they totally missed that, which was, silly. But short-term liabilities, they end up overlooking this, which was arguably more important. And it was more important because they have to roll over that debt, everyone. So that debt has to be rolled over. That's worse. Long-term debt, at least at times, you have maybe a couple years before you have to roll that out. If it's all on short-term debt, my friends, what does that mean? What are the implications of that, right? And they just completely just missed that. And I was just like, what? What the heck, guys? Oh. And yes, do this. It's a good place to put it. Thank you. Oh, yes. Okay. So it's put season. Yes. Okay. So wow, I'm like far. Oh, no. I just caught up. So seriously, NVIDIA 120 and under. Yeah. I mean, NVIDIA is a good company. NVIDIA is undoubtedly a good company. Kevin for president. He's born in Germany. We overlooked that, Andrew. Andrew's paying attention. I wasn't paying attention to that. I forgot that he's not born in the United States. Dang, I forgot that about him. So yeah, he can't run for president. But he can run for cabinet or governor. So he can be governor of something else. But yeah, thoughts on guns. There's a school. Oh gosh, you're trying to get okay. Like, I'll refrain from the political commentary on guns, but it was very tragic. I only just found out about it before the live stream because I've been working a lot today, and yeah, it's crazy stuff. Crazy stuff happening. But yeah, Andrew, that's a complicated topic. It's a multi-layered. It's multi-layered, and it's gonna get me in trouble either way. But unless you don't care and you want me to get in trouble, I wouldn't agree with that at all. I don't think limits would fix anything. Here we go. Cole's pessimistic. Cole, have faith. No, I'm kidding. I have no faith. But Fabio's wife bought the stock. Sounds like we need to buy it too, boys. She's been killing lately from sounds of it. No, she's actually pretty good. Her returns have been pretty freaking good. She has more exposure to a particular set of stocks that I try to refrain from having exposure so that we have a little bit more diversity. For example, the reason why she's been doing so good is because she's been heavily exposed to food companies and some commodity companies, but in the food sector. So one of her largest holdings was Archer Daniels Midland, and that one's done really good. But except she was extremely concentrated in Archer Daniels Midland at the time. She's recently been bringing it down. But like at the time, she was extremely concentrated in that company, and that company did fantastic. And her thought process was almost, and it was her idea. What I do sometimes is I'll give her a ton of stocks, like a list of stocks. And then I'll say, I personally like all of these stocks. And then she'll ask me about them. And then through her thought process, she kind of rationalizes. She knows that for the most part, I've done the research on all the stocks that I brought before her. And so the ones I bring before her, I think are all good companies. So then she'll look at it and she'll say, okay, from these companies, which ones do I agree with their business model? Which ones am I comfortable with? Fun fact, studies have shown that women are more conservative investors, which is funny. I look at her portfolio, surprise, surprise, it's a more conservative portfolio. That's done, on average, pretty freaking good, especially because of its heavy concentration into some of these companies. Another one was Tyson Foods. She was buying a lot of Tyson Foods as well. So like the theme she followed, and I asked her just the other day, like, okay, well, I'll ask her again and I'll tell you guys, but long while ago now, I asked her, like, why did you like these companies? And she said, well, because I know that people have to eat. And I was like, well, that's very obvious. And again, remember, there have been these stocks that were brought before her were already filtered for on my end, so I already believe that these stocks are all good. It's just now up to her, it was up to her to make the decision. Now there have been some stocks that she chose completely out of the blue on her own because I don't understand them and I can't really evaluate them very well, like such as Revolve. She had exposure to Revolve. Like I talked about that in the past, that was a trade that she had because she liked the platform. And then once we got to that point, then I looked and helped her out with an evaluation, and we decided to, take some profits there, and we redeployed it elsewhere. She also, I think she was buying CRM. Here's a 13F filing for my wife. CRM solutions, or not CRM solutions, CRM as in Salesforce. She bought a little bit of Salesforce, but just a little bit. Really, she bought mainly was Target recently because she loves Target. I can't get that woman out of Target. Once we're in Target, and she likes to bring me. It's this weird thing, like, she might not even speak to me at Target, but she just likes to know that I'm just there. It's like she explained it to me. It's like, she told me, like, I just like to know that you're just there, And I'm like, no, I don't know. I'm not buying anything. You're not even asking for my opinion on some of this stuff. You're just, taking it to buy it. And then she just likes me to just be in the vicinity, just there. I was like, okay. All right, I'll just be here. But yeah. Okay, so no Congress were elected for life. The people elect them. Oh no, don't worry, I understand. Do you have a price for Peps that you would like to purchase? Only curious because I work for them. Well, great company to work for, by the way. And if you have all the stock options, good overall business. In fact, I like them over Coke personally. By the way, I'll just tell you this. I'm a Pepsi person. My wife is Coca-Cola all the way. We have a big war here. in the house because I prefer Pepsi products. She prefers Coke products. But Pepsi owns Frito-Lay, so the chip products they dominate, right? So for the most part, but I don't drink soda much, so then neither does my wife. But then predominantly we have more Coke in the house. But you know, if I had the choice, I'd take the Pepsi. I know that some people here are probably Coke people, so you know, Coke as in you know what type of Coke I'm talking about, not Coca-Cola, you know. All right, so but I can plug in Pep right now, but I'll tell you right now, I just plugged it in. Pep's overvalued, but Pep is overvalued because everyone perceives it as a fantastic company, by the way. So we've talked about companies like this in the past. So the opportunity is basically just wiped out because everyone's like, this is the great company, which it is. Undeniably, it's a great company. It's just people are just really willing to pay up for this kind of company. So the yield's really down. You know, if you actually look at the PE here of 22.95, it looks cheaper than before. And you can actually see that reflected here from 30.46 to 22.95. If you are, I'd say that if you are expecting like some crazy amount of growth, you're probably not going to get it. Really what you're priced for is like 8%, which is respectable, by the way. And let's actually put that at 0% because I don't want to assume that. But yeah, just looking at 8%, you know, I think they could grow probably at anywhere between 5% and 5%. And I think probably 10% is like the roof. Let's put this at 9 actually. And then let's put this at 8.75. Yeah, that's fine. So we're just off the cusp there. Let's see what about 9%. Yeah, 9% gets even lower, but 6% for sure. So I'd expect lower returns from PepsiCo for a little bit, but if it ever were to correct, it would be a good buying opportunity. But you know, a lot of dividend investors, and this is actually the thing though, you know, like getting back into dividend investors are going to buy this thing and they're just never going to sell it. They don't even care. Like that's the strategy. That's the point of the strategy. You buy it, you literally do not care about the stock price, and then you only reinvest the dividend. And so if you have if the massive part of the investor base all thinks that way, go figure, and they all understand that PepsiCo is a high quality asset, go figure. It seems to be more resilient, not immune, resilient from these massive price drops. Okay, resilient. And then considering that it is seen as a flight to safety, because undeniably it's a fantastic company. Why am I not more active on Twitter? Because I'm absolutely horrendously lazy, and I know I should be, right? The thing is, you know what? You guys have, I don't know if all of you have seen, but I'm going to shout out my Instagram. So if you follow Capital Mindset on Instagram, I'm trying to, as many times as I can throughout the week, no promises. I do a 1 minute or shorter, maybe I'll do 2 minutes, of just a quick update on the news of that day. I wake up. Sometimes I'll do it when I wake up. Sometimes I'll do it right in the middle of the day. But I do post videos on there and TikTok. And you might have seen some of them on YouTube Shorts. I have a question now for you guys. This will actually change the forward, not expectations, but the forward behavior of the channel. Do you guys like it when I do the YouTube Shorts, or do you prefer them to be kept or relegated to Instagram and TikTok? Okay. If you guys really do enjoy the YouTube Shorts, then I will go ahead and just upload them to all three. But if not, that's fine. Or I might create Capital Mindset Shorts because from what I've read, they do in fact harm the regular video content. Okay. From what I've seen. Okay. I could be wrong. So that's kind of why I have some new videos on the Instagram, but not on the YouTube. All right. Let me know. And then I shall think about it and probably do it. But I shall probably do some Twitter. Maybe I'll do some Twitter. When merch? I mean, do you guys want me to do merch? I don't know if I have like is that a thing you desire? Like, okay, if you desire to have Capital Mindset merch, I can go do it and then just like, yeah, it won't do me anything. But yeah. Okay, so I see comments coming in. Just upload. Okay, and then I don't know if this is a shared opinion, because I created the Discord because people asked for the Discord. And so the Discords was actually come out of the subscriber requests. And now do you guys actually desire merch? And then I guess I go on like Teespring or whatever and just set it up. But puts on SWBI probably could work. Yeah, probably could work. I don't know. Like the thing is, I didn't like the company, but it doesn't mean I want to bet against it necessarily because it could have a massive spike. Strongman's TTCF short position. Yes for the merch. Okay, I'll look into the merch. But if I see a bunch of people, well, no, you know what? I think I can do like a version where it's not going to cost me, like to maintain it, and then just have it up there as an option for people, right? If you really want it, and just make it funny. All right, no, we can make it funny. In fact, I'm gonna have to, yeah, I'm gonna have to do that. Puts in a Tyson Foods, Jeremy. Okay, so Tyson Jeremy cry about TTCF position. Yeah. Yeah, my wife is actually very intelligent. In the next coming days, I will maybe talk about the new job she got, which you guys don't know this about my wife. You might think that like, I don't know. I saw some like commentary about, my wife that it may look like, I'll just say it out loud. Like, she was the breadwinner for quite some time. I'll tell you that. She's a very intelligent woman. So of course I'm completely biased, but I think she's very good looking because she's my wife, married her for a reason, and she's extremely intelligent too. So yes, I desire to make offspring with her. I said it in the most weird way there. That's how I got her, by the way. I just said words like that. I said, do you desire to make offspring? And she said, I do indeed desire to make offspring. And I was like, yes, marriage is a thing. And said, we agree on marriage. Oh, yeah, no. Yeah, so true pieces, fear regulation. Oh, yeah. If you get fear of regulation, then there you go. Oh, wait, did SWBI go up today because of that? It's a terrible reason to go up, but it did go up by like 1%, but. Okay, so dividend kings, higher PEs on average until the cash flows dry up and the dividend stops growing / cut. Yes, but exactly. But why? Because the investor base is expecting that. The investor base desires this dividend, right? That's the purpose of why they exactly own it. And so if you have a cultivated investor base that looks at you like a cash cow, if you're no longer serving that purpose, yeah, you're going to get in trouble there. But not in trouble, but the business not necessarily affected necessarily by that, but the stock price would. You could make the argument for their cost of capital would then for rise, but no YouTube shorts. So I see some people are saying upload on all platforms and no YouTube shorts. Thoughts on KOF? I almost skipped your question by accident. Thoughts on KOF? Okay, KOF I always forget. Oh, this is the Mexican bottler, right? Femesa SAB. Yeah, I think this is the Mexican bottler. Yep, multinational beverage company headquartered in Mexico City. You have to worry about cross-currency risk, as always. Yeah, absolutely be very careful about that. Yeah, it looks like it's a high dividend, but they probably paid in pesos, so be careful with the currency. Currency aside, probably ran pretty well, but currency side. Dividend King, so no YouTube shorts. So yes for merch, just make it funny. Okay. I say go with what's comfortable, and mercy can wait. Oh, merch can wait. Merch can wait. Yeah, so because, okay, I'll say like, if I ever have like funny catchphrases or anything like that, and people desire to have some funny merch, sure, I shall make some funny merch. It'll probably be like a coffee mug or something. And again, it'll be entirely like your choice. It's not going to advertise it on the channel. Because there's some people want to have available to them. Sure, why not? All right, so I personally like YouTube Shorts or Instagram. I don't like Twitter, nor do I have an account. I've never used Twitter. Like if I go on Twitter, it will literally only be for Capital Mindset, and that's about it. All right, so Capital Mindset might make an announcement. The thing is, I have to go out of my way to go on Twitter and make the announcement. I'm just like, it's like, like what am I going to tweet on Twitter, right? I'm not going to tweet trades because I don't do that. That's not my style. I don't offer that. But maybe I tweet like, like what am I tweet about the Fed minutes? Like, really? Okay. Yes, LOL. Yeah, mercy. Like I was like, who am I killing, Bacon? Like, what's going on? Oh yeah, no, I'm still live. We're going for 2 hours and 30 minutes. It's now a reputation here on Capital Mindset that we do like very long lives. I'm young at least still, and I have tons of energy, except for when the times I have a lot of work and then I have no energy and then I'm dead. Like yesterday, I couldn't do any videos. I was too tired. I was way too tired. Tomorrow, hopefully I have time to do at least one video. But we're like closing on a deal. So it's a lot of work, but, yeah. All right. Oh, question. Oh, you see this? I got to move it up. All right. Capital Mindset. How should someone determine the number of stocks in their portfolio? I've heard it say it depends on the amount of capital you have. Would like to know your opinion. Yeah, I would say cop out. But I won't be a cop-out, don't worry. But the beginning of this is going to be a cop-out. Yes, it does. Oh, we're at 69 concurrent viewers. Sorry. We're at 69 concurrent viewers. Very important moment. Okay, but anyways, back to the question. How should someone determine the number of stocks in their portfolio? I'd say, yeah, it does depend on the amount of capital you do have and the desired goal. But, then again, right, after a certain point, you might as well buy the index because it's too many. You need to buy as many as you possibly can, where you can still pay attention to them. If you can't pay attention to the stocks reasonably, then you probably shouldn't do it. You probably shouldn't have that many, okay? So I would say it does depend. And I'd say it's more going to be a product of what you find in the market, because I don't plan out, I'm going to have 15 stocks. I just plan out, I have capital available. Am I selling or am I buying right now? Am I buying this particular stock? Am I selling that particular stock? I do get crazy urges at times to clean up the portfolio. I just kind of stop myself a little bit. But yeah. I do get myself some crazy urges sometimes to just clean house, but yeah, I almost like love the romanticism of it, of having a really small concentrated portfolio. There's something about it. I don't know, but I do stop myself. That's a little side commentary that you didn't ask about, but I hope that answered your question. I'd say 15 is a good number, 20 is a good number. 50 and above is not a good number. I think that point is, you're basically becoming an index fund. There's no way you're going to be able to do it. I'll tell you this. For example, funds that have 500 and have an asset manager who have 500, of course they're going to underperform the market. I could never, ever, and by the way, sometimes by regulation they're forced to, by the way. I could never, ever expect myself to outperform anything, right, by choosing 500 companies or 200 companies. If you put a gun to my head and you force me to buy 200 companies, probably not going to be good. You'd have to almost have to, back in the day, like what Peter Lynch did. Take that approach on investing in order to have a chance. But if you try to buy all these good companies, you're going to make a mistake. There's no way. Anyways, it's like an arbitrary measure there. Thoughts on fertilizer companies, hearing a lot about borrowers on pricing increases they are seeing. The thing with fertilizer companies, again, their underlying product is a commodity. So if you think it's going to rise in price from here, it might be a good investment, right? It probably will be a good investment if the price continues to rise sustainably and sustains itself, for long periods of time. So hearing a lot agricultural borrowers price increases they are seeing. Yeah, I know. So if those remain, there isn't pushback there, but sometimes the cure to high prices. Of course, again, the war threw everything out of proportion here, because Ukraine actually is an exporter of potash, a decent amount. So a bit of a problem there, but yeah. What do you do for work? Okay, so it could vary on a day-to-day. So I kind of talked about it in the past, but this is, of course, these moments are really good questions to ask. I sometimes get asked in the comments, and I tell them, come to the live stream, ask in the live stream. So here you are, asking in the live stream, and now I shall answer you. So it can vary from the day to day. I am going through a career change, by the way, in about July, but I will always maintain a relationship or form a relationship with my current company, especially because I was actually paid in some capacity, not in some capacity, in quite the literal sense, in equity. So forever I shall have a relationship with where I currently work. I am getting a pay cut, technically, going to work where I'm going to work, but I'm doing it for primarily the experience.
But side note, that's side commentary. What I currently do will depend on the day-to-day, week-to-week. It could be focused on a commercial real estate property, on coming up with an evaluation for it. And I'm not by myself. I'm in a team. So it's not just like, that makes it sound almost like I'm doing it by myself. And then the same can be said for when we look at privately held companies. So we're looking to acquire the excess capital of the parent company, that the parent company, basically, the parent company, no one's ever asked me about it, but I also refrain from talking about it. I'm kind of waiting till I have their career change, and then I can maybe be more open and talk about it, because then it will turn into, from my workplace to a holding in the portfolio, or my private portfolio, and then I can maybe talk about it a little bit in that context. But it does something that you would never guess what it really does, and it does something that's very boring, extremely boring, and then it grabs the cash, and luckily it is operated. It's a smaller enterprise in terms of who owns it, so it's very centralized in terms of ownership. Again, we don't have the massive amount of shareholders you have to listen to, et cetera, stuff like that. And so I think the decision making is very calm and calculating, which is great. And they take the excess cash that they generate from the business that they don't need to reinvest back into the business, and then they seek out opportunities. So like I've hinted in the past, unlike in working for a fund, I don't seek to sell anyone anything. I'm not managing money, and I actually don't desire that as my career goal. But you never know how things end up. But for the foreseeable future, I don't desire that, and because it's a lot of stress. And so it's all the firm's funds, and so the firm's funds is it, and it only comes from the main parts of the business. It's kind of similar to like a very smaller version of Markel and Boston Omaha. I'd say a smaller version of Boston Omaha is what it is. It's not publicly traded. It's not a publicly traded company. So it has a portfolio that engages in privately traded equities. It has that. It also has a lot in a couple private businesses. And then that's one of the things that we're closing on. And it has commercial properties as well. And then that we can close on that too. So like in the past 2 years, I can say this, that it was closing on some industrial properties within the area where I live. And some of those were warehouse facilities, which were really hot at the time and now are even crazier hot, but then now kind of are cooling off, hopefully. But they're cash cows at this point. And some details. Luckily, we didn't, well, not luckily, maybe some people will be like, you're stupid, but we didn't take on that much leverage to acquire those, which was good. We had a decent amount to deploy. But I'm getting too much deep into it. But hopefully that answers your question. What do you use for recording your videos? Equipment. I have a webcam. This is a webcam. It's an HD webcam, of course. Eventually, I might upgrade to a DSLR camera, whatever. It's like $600. But I never owned a DSLR camera. I use this webcam for meetings and stuff, and then I have this Rode microphone. I think it's a decent price for what it is. You just have to have the right audio box and set it up properly, and then your voice can sound okay. And then, of course, there's other setup features, but that's the equipment. So 69 stocks. No, 69 stocks is the perfect amount. Okay. If you don't have 69 stocks, you're doing it wrong. 69 got it face. Sell stocks you like for a loss or buy better risk reward stock. Yes. Oh, yes. No, but not. Well, I was about to use an example that I didn't technically sell for a loss. I've sold it for barely a profit, and it was a good stock. That was Bristol Myers Squibb. So Bristol Myers Squibb, you remember back when, funny enough, his name was Austin as well, just like you. Andrew Austin. So his name was Austin, and you probably remember him. And we did a video on Bristol Myers Squibb. We both owned Bristol Myers Squibb, and I liked Bristol Myers Squibb. Everything about it was great. The model liked it. It was a defensive stock. It was priced amicably, and I held it. And then I sold it for just barely a profit. And you might have been, and I remember the commentary at the time, which I agreed with mentally. I said, and I stated in that video, this is a good company. It's probably going to do good. It did very well. All right. It did actually pretty good, especially when you consider the backdrop of what happened after the fact, where the market actually did not do so well, and it did very well. Instead, I sold that stock to buy another stock that ended up doing really well as well. Mainly, you probably know which one it is, Cardinal Health. But And I think I put some of the money in some other stocks. But point is, yes, it has happened. So like that goes to show that there can be many reasons as to why an investor decides to sell a stock. You don't always have to sell a stock because, it's in particularly overvalued. It could be a good investment. You just found something better. As far as a loss, yeah, I recently sold, not recently, but Tencent. I sold Tencent recently to then buy Prosus because I thought Prosus was better, and I took advantage of the tax loss harvest there. But yeah, statistics say that owning stocks, just two stocks limits 40% of the non-market risk of owning just one stock. This type of risk supposedly reduces 17% with 4-stock portfolio, but 81%. Yeah, actually, I remember learning something similar to that. I don't remember the exact percentages, but I would take that as what it was in portfolio management theory, which was a class in when I was doing my finance major. I remember that. Yeah, we're back to, well, now we're under 69 viewers, but we were back to 69 viewers. I saw that. 90% of stocks, 92% with 16 stocks, and 99% with 500 stocks. Yeah, well, 500 stocks at that point, you're like basically the market. Yeah. But yeah, you see, that's where I got the number. I pulled it out was between 15 and 20 stocks is typically, in theory, where a individualized portfolio should be in order to minimize the broader risks. Rick. Yes, Rick stock. Rick stock's a wonderful stock. Opinion on GE, some of the parts valuation with the split up as a catalyst. Problem is they have so much baggage, so it's difficult to say. Some of the parts valuation sometimes doesn't actually pan out. Sometimes it does. So, for example, Raytheon Technologies was one that I did play. I don't own it anymore because you don't see it in the portfolio. But I had purchased Raytheon Technologies, I purchased Carrier, and I purchased Otis at the split up when they merged with United Technologies, and then United Technologies split up. That one was a good sum of the parts play. Another one was Dell. Dell was another good sum of the parts play where it had a big position in BMW. And when the value of BMW was greater than all of Dell, what Dell owned of BMW. They owned 80% of it at the time. And that one played out really well. But yeah. Well, I wouldn't be able to make a Rue t-shirt. That would 100% be Strongman. That'd be me ripping him off. So I wouldn't do that. But, well, no, if I did do that, I would 100% pay a royalty to Strongman. But because that's his trademark. That's definitely his trademark. And so he would, I wouldn't feel right not rewarding that. So why do you diversify and think about how you do it? For example, you don't do stupid thing like crypto community going 50% Bitcoin, 50% altcoins. Gosh. That wasn't addressed to me, but I wanted to bring that up because it was funny. SCHD ETF, also CHD growth ETF. I mean, I think he got rid of. He only has one ETF in there. And I think he might have recency bias, so he might be plowing, or he removed all of the other ones, and then he put the money into there because it outperformed. I don't know exactly, but I'd have to check. Oh, wait. No. No. So Austin pops in here and there under a pen name. But he pops in here and there. He's working the corporate life as a tax accountant, and kind of like Strongman. But Austin's working at a regional firm, and so his busy season is going to be crazy nights. But he's gonna pull through, and so the corporate world did take away Austin. Yeah, but you see, but the thing is, Julius, I got a comment saying that Joseph Carlson invests based on evidence-based analysis. I do not. So that was according to the comment. So I have to just disagree with you there. How often you check companies? Quarterly after earnings report? I check them more often than you think, actually. So I check them as much as I feasibly can. Actually, I try to remove. I don't like to look at the stock price every day, but I'll look at like the business, look at news on the company and stuff like that. Some companies I won't really care about too much. Other companies I'll look more often than not. So like, for example, the oil companies, I would look at them really often back in the day because those are cyclical businesses. So I have to be up on my toes a little bit more on those kinds of companies, like BHP too, ConocoPhillips, etc., stuff like that. Does Joseph Carlson ever use rate track? Oh, weight rack. I was thinking about stock related, so my brain was trying to formulate that into a stock question. So I was like, what the heck's going on? But I don't know. I don't want to make a comment on his workout routine because I don't want to be mean on that. But like just a preliminary thought, it would not appear so. I should have a weight rack behind me. Actually, no, I do have I'm calisthenics, bro. No, I'm kidding. I'm not really fully, but I'm over there on the other side of the room, and I do have dumbbells over there too. So I got weights. I'll put them back here. Just show them off. Just show them I lift, bro. But yeah, Capital Mindset. I like your earnings call videos. Which one do you plan on doing next? I was hoping to do one on a company that I did own because I was getting that feedback. So I was doing all those as like testers, trying to improve upon it, get feedback, get people to give me an idea like, okay, you could do better this and this. And after reading all the feedback, now I'm going to do it on the companies I actually have positions in. So the one that I might do is Baba. Baba is going to be the next one. So I'm going to do an Alibaba earnings call video, and I think that's the next one I'm going to do. Of course, they're going to take priority by like interest because obviously I want to provide the most value to the audience. So I'll take the ones that have the most interest, and I can kind of be kind of a judge on that, on which companies I own in the portfolio that have a greater degree of interest from the audience. Baba my Abba, yes. All right. Best way to keep up with stock news for what you're holding. I suck when it comes to news. I always last to know. Okay, so I mean, there's so many different ways. I mean, some brokerages offer that service already. I, for example, have a feature, and I'll actually show this. So like, we plug in PepsiCo. And yeah, I'll just show this to you. So this is going to be a feature of it. And I designed it to do, actually, I can design it to do as many inputs as I really want, or outputs as I really want. So the input is essentially the ticker symbol. And then it will grab everywhere from the internet, any articles, any news about this company, and just bring it to the forefront. If it's about the stock, it's going to bring it up. And so I can filter it out through this. I can filter it out, by the way, I have it only set right now to articles about it. I can set it to articles and like news bits, like just random news about Pepsi, like a riot in one of their factories, right? I could set it to that. But this is something that will be available, for example, on there. And it's going to pull from every website because, for example, you go onto like a website like Seeking Alpha. Sometimes they'll report on something, but they actually might miss something, unfortunately. So then you want something that can pull from multiple places. And some services, I think that some services do that. But yeah, that's going to be a feature that's available. I have this right now that I actually do use this. So like right now it's looking for PepsiCo. So it's pulling up the most recent 10. And I can set it to whatever I want. I can set it to, make it 50. Right? But I just don't, care to look at 50. And then also I can see recent mentions on social media. I see that PepsiCo as a stock, the stock mentions, not the company, the stock was mentioned recently on Twitter, and it was a positive mention. Reddit, it was mentioned twice, and it was both positive mentions. So it's very positive sentiment score. And then the general also pulls from the general internet. So those are the websites that it will measure from individually and isolate them, and it will tell them in isolation. And then it will do a general analysis. So generally, as we can see here, I kind of move out of the way. PepsiCo has a positive sentiment score, which means those who talk about it tend to like it as a stock, which is what that tells me. So those are some things that are there. He goes out of his he also goes outside to tempt his stock picks. Capital Mindset. That's why he has Vici. He went to Viva Las Vegas, and the amount of tourists. Okay, I like Vici, like I said in the video, but I agree that's not a reason to like Vici. They don't benefit necessarily from that. That doesn't make sense. It's a real estate company. It takes rent from the operator. The operator will do better from all the people. If there's a ton of people going to Las Vegas, or not that many people going to Las Vegas, it doesn't matter. What matters is the rent agreement. Yeah, it's like of course, this comment's not criticizing you at all, by the way. I hope you know that because my tone might sound that way. No, it's criticizing him entirely, but it doesn't make sense. It does not make sense. I don't agree with that. That's just I don't even know what to do. Baba my Abba. Yes, Baba my Abba. GME earnings call. When is that? Or did they? No, they already probably did it. They already probably did it. So I can do that too. Hey, welcome to the community, Yusuf. Again, you talk to people there. They're very amicable from what I see. We have a Nazi bot, by the way. Oh, there you go. Demonetized. No, but it's an inside joke among the Discord community at this point. We're trying to absolutely slam it down, and we're gonna restrict its ability to restrict people based on the words, but it does so because it's trying to prevent the Discord overlords from nuking us, because they can nuke us for certain breaks in terms of agreement, by the way, if you guys didn't know that. But side commentary there. MCK, I might do actually that one too. There's actually a lot to do, so I could do this one, GameStop, really all of these. GameStop, if I did that, it's honestly just like view poaching, like not view poaching, but view farming. But yeah. Black Old Navy hoodie. Who has a Black Old Navy hoodie? Sandbagging us. Someone else is sandbagging you. What did you take on investing in companies that are unionized? I feel like they are very good at destroying companies over the long term. Yes, I do think so too. I think that. So I want to own a company that people do enjoy working for. Don't get me wrong. And that's, by the way, that doesn't mean unions make it good to work for. Actually, I used to work at a company very briefly. Well, not very briefly. I interned there. I interned at Disney once. And that experience was very interesting with the union. I had a conversation with some of the employees there, and they were talking all good about, not all of them in Florida. In Florida, not all of them are unionized. In California, I think all of them are unionized. But in Florida, you have the option to, which is why I love Florida. The employee has the choice to decide whether to be in the union or not, and they take their union due on top of that. So, but anyways, I was talking to some of the employees. They don't even get really any of the benefits. It's like the unions. People kind of sometimes even forget the context of how unions started. It's, look at its ties with the mafia. Maybe I'm ignorant in saying that. Maybe I'm missing some context there. But unions don't always, go figure that despite whatever good they were designed to do or intended to do in the beginning, I think they're pretty obviously, or in my opinion, and again, I could just be ignorant about it, I think they've been corrupted from what they originally were intended to do. And in fact, it's kind of egregiously in some cases. And I do think that unions tend to be counterintuitive in some instances. If I had full control over a company though, I would make sure to go out of my way that the employees do like to work there, because I want to acquire talent, right? I think that you have an incentive. I think the market naturally has an incentive to make sure that people do enjoy working at a place, okay? Of course, that all depends on, the type of macroeconomic backdrop we're in, because if we're in a place where, there's a stupid amount of unskilled labor, of course, unskilled labor, there isn't really as much of a market incentive to be nice to unskilled labor in those instances, because there's, you can replace them like that. But generally speaking, for the longevity, if you're a long-term thinking manager, not a short-term one, if you're a long-term thinking manager, you want to have the appropriate balance where your employees do enjoy working there. I don't think it's going to be successful long-term for a company. And if you're an investor, I think that's an important thing to consider. You're looking for the long-term of a company. You want to try to make sure as an owner that your company is retaining the talent. How do you retain the talent? Well, you don't spit in the talent's face. But yeah, that's kind of my quick thoughts on it. Like it's a crazy bot, but we're working on it. So just don't use any naughty words whatsoever, and the bot's fine. In the beginning, it punished people for using the word balance sheet because it thought we probably accidentally created sentient AI, and the singularity occurred within that Discord server because it started interpreting. No, literally, it started interpreting what people meant by words. It was weird, and we were like, why? Why are you interpreting meaning? You shouldn't be interpreting meaning, but it was because sheet was not a banned word. SHEET was not a banned word. But yes, and it also went out of its way to ban someone for saying the name of a company called Cummins Corporation, because they thought they were trying to say the word CUM, and then so again interpreting meaning beyond what we told it could ban. But okay, crazy bot. Yeah, your mod is ridiculous. Someone wanted DD something I showed. Well, no, it's not a person, Julius. It's not a human being. That's what makes it insane. So we have a machine doing it. So the machine has achieved sentiency, and we as humans go in. Yeah, I know. I'm shouting you out, Bacon Memes. I'm shouting you out. You're the one. It was hilarious. And then, if that ever happens, remember to message the moderator, and he will get you out of trouble. But yeah, he's fighting the bot, so he's not the one doing it. So it's not a human being mod. Or how does someone evaluate a company's management? Okay, so you look at the management's experience, you look at where they came from, you look at their ability to meet certain key metrics. Be careful with return on equity. I discussed it in the video, which you definitely should take a look if you haven't. But there's a video titled How to Destroy Shareholder Wealth. I think anyone who in this chat, if you want to become a CFO or CEO one day, watch that video and then be sure to go destroy shareholder wealth by doing exactly those steps. So you can boost ROE with a certain couple tricks, and some of them are doing egregious buybacks, but either here or there. So ROE is one metric you do want to maybe look at. ROIC is another one. You want to look at a bunch of other metrics to kind of gauge the quality of the capital allocation of management. That's how you can judge management. Some people might say like, oh, look at Voyager. Voyager has the E-Trade guy, and that's bullish because E-Trade's amazing. Okay, well, if that's the case, there you go. Bullish on E-Trade, or sorry, bullish on Voyager because E-Trade. That's not research. So don't use that. Oh, guys, we're approaching 3 hours. I think we're going to hit a record. Banks have long 10Ks. Yes, they do. Yes, they do. They have really long 10Ks because if you look at all the types of assets that they own, they have to show everything. All right, so you act ATVI as Unionized, it seems. I wonder how that's going to play out for ATVI employees once Microsoft buys them. Well, yeah, I don't know. I don't think they should. I think, especially in a desirable, like when a company, first of all, is like paying really well on top of that. I don't understand why they decided to unionize necessarily. Maybe because of the whole sex scandals or whatever the heck's going on there. Okay, so June 1st after the market close. So I'll probably do them as well. I worked for 3 different companies that all had unions. 2 out of 3 of them. Oh, wait. 3 different companies that all had unions. 2 out of 3 of them, I was on a 2-tier pay scale. So obviously the old heads were getting paid almost double what some of the new hires started at. Yeah, you see, and that's the biggest problem. It's not efficient. It's not a merit-based system, which makes it unfortunate because I think if I have employees, I want to pay them based off of value produced, and then I'm incentivized to do so because I at the end of the day, I want to provide value to my customer. So I want to reward the employees the most that provide the most value. So, of course, every job is different, varies and stuff. But yeah, I understand. Yeah, it can suck. Do you ever cover Yes, I have covered Starbucks stock. I love the company. I would at one point consider buying them if they get to the right price. But yes, Bacon Memes got banned from that. Yes. Capital Mindset it's a good thing that is in public. That's incredible. That really is. Come and go. That's amazing. Who came up with that? Capital Mindset, can you please answer my question above? I accidentally tagged. Oh, okay. You see, my bad. All right, so How do you read yearly or quarterly reports? You often read them or skim through? Oh, no, I'll read them. I'll skim through the risks. I don't really care about the risks all that much. I'll skim through that. But no, I'll read the financial statements in sometimes in detail. I'll look to see if there's anything weird. If there's like a lot of goodwill write down, I'll see like, okay, why are you writing all this down? Sometimes, not sometimes, the best companies will all share that in great detail as to why they're doing that. So, and give it to them. Voyager, at the very least, was very upfront in their statements. Well, actually, that's probably because different regulatory system, but they were more upfront as to the depreciation methods, why they were doing it, et cetera, the justifications for it. So really important there. But I do read through it. Okay, remind me not to mention Dick's Sporting Goods. No, yeah, no. Like literally. So right now, if you were to mention Dick's Sporting Goods, you would have to mention it by ticker, not by the full name, because the robot Nazi would literally catch that and be like, you meant to say phallic objects, and you deserve to be destroyed, and it'll destroy you. But we're working on it. But because we're trying to help it decipher context of it. Like we don't want you to be calling someone a DICK, but you can say DICKS Sporting Goods, right? We want you to be able to do that. I'm applying to crypto companies like exchanges for my next job position. It's a good idea given the downturn in the market. No, it could still be good. Like some of them might still be very successful. Because, okay, like I'll tell you right now, I'm a sideline cheerleader for Bitcoin. I don't own any Bitcoin. I don't own any cryptocurrencies whatsoever. My only blockchain exposure is Overstock. We already talked about that at the beginning of the stream. But I'm a sideline cheerleader. And same with like Jeff Snyder. I think Jeff Snyder is expressed also, by the way. I found out recently. I think he thinks like me in terms of that. He's a sideline cheerleader. He thinks the prospects are very interesting. That we do not want a central bank digital currency whatsoever. We do not want that. We don't want any form of that. We do desire, though, a adaptable currency that the market might actually come up with. And the market is it's like you and I, right? Together, the people, right? The people. Kind of like how Venezuela now uses the dollar and they just completely ignore the government's rules on like what currency you should use because it's technically illegal according to the government to use the dollar, but the entire economy now runs on the dollar. But anyways, long-winded answer. I do believe in blockchain technology's prospects, but not in how most people think of it. Like, for example, NFTs will be used, but not how people think of it. Like, they're not going to, like NFTs are going to be used because NFT just means non-fungible token. That's all it is. So take that and then extrapolate from that. What can you be doing with that? What can you assign digitally some identification so that you can keep track of things? Sounds like companies can keep track of inventories better. Like, you know what I mean? So there's a lot of things that can be built upon these technologies, but some people say, oh, I like the technology, but then they say they're investing in like monkey token and they're like, NFTs are the future because the technology. It's like, okay, well, what? I don't know. And then we have a question for you that I'm going to highlight because I'm also curious too. I just saw it with my eyes. Sparky, what kind of jobs and crypto companies offering you, Sparky? So let us know. I'm actually really curious. All right, so Ricky, what are your top 4 or 5 insurance plays? PNC or life? I prefer property and casualty over life, but life can be pretty good. So if I had to say, obviously Unum is in there. I like Cigna Health, or I did like Cigna Health. I like as far as Progressive Insurance is pretty good company, very well managed. I like Markel. Really, like those are the ones I'm invested in, Unum and Markel. Believe it or not, also Boston Omaha has an insurance part of their business. Chubb is very stable, very mature business in insurance. And UNH has I have a thesis for UNH that I have never shared. But it's a really out there thesis. I might do a video one day, but yeah. I don't know what speculative assets are coming. Holy moly, dude. Go to bed. No, don't worry. I'm probably going to close the stream soon because I am getting pretty tired. My brain has gone for 3 hours straight. No, this is going to be a Mike Stathis live when I go 5 hours. Oh, I forgot Aflac. Aflac's another actually good one. But, Allstate's good. Aflac's good. Those are all really good companies. Oh, okay. Well, I actually can't bring you on here because it's not a streaming service like that. It's not StreamYard. If it was StreamYard, I could actually get you on there, get you on here. But yeah, they have a freaking duck. So if you're trying to debate politics with me at nighttime, does the people really want to see that? Sleep is for the weak. Mostly tech developer and project managers. Binance and MoonPay are a hiring binge. I like that they're all support fully remote work. Well, that's good. That's positive. So are you going with I'm guessing you're going with the development teams, Sparky, but because that's the ones you mentioned, but mostly tech developer and project managers. So no, I think it's gonna at the very least, you always get good experience working for these companies regardless. And I'd say Binance is pretty big, but yeah, there's possibilities for them to be successful, by the way. And some of them are actually going to become full-fledged brokerages. It's just some of them I would be very careful with, right? So some questions here. Okay, so why do you keep cash? You're getting a guaranteed negative 8% return. Well, at the present moment, the market's down 20%, so the delta between that is fine. And yeah, so but I do keep cash because, for example, I'm also trying to buy some real estate because assets are coming down. So that's also another reason why I'm pretty certain, or I'm pretty sure that the United States is not going through that like inflationary thing, or the mechanism for how we're getting that inflation isn't what people think it is. But yeah, because otherwise, you would have an inflationary meltdown. Market theory returns 8%, but we'll see how that goes forward. And stablecoin is tanking. And stablecoin staking. Yeah, well, I don't want to do even that. BRKB exposure, thoughts on valuation. BRKB is a staple. It's a bellwether. I don't hold any. I think the valuation might be a little bit too high. Back when Buffett was buying shares like crazy on BRK, not him himself, but they were doing buybacks. That was a good value, obviously, but yeah. No, you're wrong. See Tesla going 2,002 years. Yeah, he's trolling now. I have BRKB for the car insurance discount. Yes, actually. Oh, yeah. I have my wife, though. My wife has, because we have Geico. We have Geico for our car insurance. No, Julius Caesar is absolutely right here. Many of you don't know this. You do get a discount by owning BRKB. So BRKB, you do get a car insurance discount on Geico if you own a share of BRKB. It's small, but it's still a discount. And why not? You own Berkshire Hathaway. That's great. BRKB doesn't even cost that much. Let me actually pull up the... Imagine if there was like, you had to hold BRKA. So it's $309. So $309. All right. So I'm going to answer some last minute questions. I'm going to go to bed. Capital mindset. Do you think the index investing might be a thing in the past? With so many people being passive, it stands to reason that the active investors and managers might have an edge. Well, it depends on the active managers, because remember, some of these active managers are forced to buy like 500 shares or 500 stocks, or any number that's amount. And again, like, I don't care who you are. If you're trying to buy all those kinds of companies, that many, you're not going to pick a ton of good ones. So not necessarily. And passive might be becoming more and more dominant. I discussed that in the ETF video, that there is a sector, not a sector, there's certain types of funds that aren't even considered passive, but they're technically like passive for all intents and purposes, that when you add them together, if you look at Mike Green's work on this, and other research has been done, it's pretty much like now a decent amount of the market is relatively passive, but that's just to the benefit of the individual investor, because you should, in theory, if that's the case, you should in theory see very quick drawdowns and very quick rises or spikes as that pretty much continues, and like momentum driven investing tends to be pretty strong. That's why there's a lot of strategies around that, but regardless, I'm getting ahead of myself. All right, so do you like Amazon or Google better starting a position? Google probably right now over Amazon. Do you like aerospace plays? What about RTX, LMT, or NOC? None of those. LHX instead, but RTX maybe over LMT or NOC. Well, actually, I don't know what the prices are at right now. Lockheed Martin. Oh, wait, let me see if I still have this up. I thought this was hilarious. So this is actually shared courtesy of the Discord. And I'll share this with you guys now because I think it's a hilarious image that you're bringing this up. Okay, so let me see if I pull this up. All right, so check this out. So this is, let me zoom out a little bit. So this is right here. So Top Gun Maverick comes out July 2nd. This is February 16, 2021. Look for a bunch of first order thinking clowns like Ross Gerber to plow into LMT after that. Jets are cool and kick ass and gotta buy. Kathy Wood providing cover ARK Invest buys, blah, blah, blah. And then March, you can kind of read through this. And oh, let me actually move the comment so I can, you guys can see it. And almost like, let me move this over here. All right, so we'll fly July after Top Gun Maverick, blah, 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 fighter jets, cool. Valuation doesn't matter, first sort of thinker, all the time. Okay, so he keeps talking about this guy, fighter jets, and basically keeps saying that this is going to happen. April 26th, keeps saying this is going to happen. Mark my words, he'll buy LMT once Top Gun Maverick is released in theaters. Prediction 2, with a few days of Top Gun Maverick release, Ross Gerber will buy Lockheed Martin. And this is why I'm going to react to Ross Gerber's newest video, by the way, or debate with Peter Schiff, because this guy is a piece of work, I can tell you that. Ross Gerber, got to like defense stocks. We own some. NOC, looking like global defense budgets will increase dramatically. Looking at some names, NOC, LMT, it's like, come on, man. Like, did he not see this? This is amazing. I think that's the funniest thing. So that's a quick glance into what I'm going to talk about tomorrow. I think it's the funniest thing. But anyways, yeah. Yeah, this is too funny. You know, YouTube Finance. Oh, thank you. Thank you. Good night. Good night. Sweater looks like a... Oh, you like the sweater? You like the sweater? No, this sweater's I think, yeah, this sweater's Banana Republic. Yeah, this sweater is Banana Republic. I like the sweater. It's very warm. I keep this room very cold. Don't want to skip anyone's comments, but trying to see I didn't skip. Okay, what are your revised sentiment on Twitter? What is your revised sentiment? Oh, I mean, I didn't really have like a per se a sentiment. I mean, I said that like, you know, it was priced like it wasn't going to go through at the time. The arbitrage, I use that word sparingly because you see the risk actually played out. I would say that now knowing what I know now about the way they measure bots and non-bots, I wouldn't touch this thing ever. I mean, I wasn't really touching it because I didn't have any, but I wouldn't touch it at all if that's what you were asking about. All right. I really do have to like kind of close this off as much as possible. All right. Capital Mindset. Why do you buy index funds exclusively? Individual stocks will outperform. Well, I don't know if that question's for me, Cole. You're definitely trolling me there. Capital Mindset, thank you for answering all the questions. Great content on your channel. Thank you. Thank you. No, I really try to answer all the questions. Well, I don't know. I don't know how I can sleep at night. Are you buying the dividend average down and selling your stake? I'm buying more Dogecoin all the way. More Dogecoin, of course. All right, guys. Thank you guys so much for coming on to the live stream tonight. We made it. We made it to 3 hours and 16 minutes. That is where we're closing off. Wow. That is crazy. All right. So I think that's the record. All right, guys. Good night. Oh, Cole, please. Please, Cole. No. No. All right. Thank you guys so much. I really enjoyed it tonight. I will see you guys on the next video. Watch out for the video releasing tomorrow. I didn't want to release it today because I was like, this live stream is going to be really long. It's going to overwhelm people. Got to sparse out the content. So it's going to come out tomorrow. All right, guys. See you guys tomorrow, I guess. All right. Bye.